Well, well, well. Looks like, I bet you guys are happy I recorded that video now. I'm just saying. I bet you guys are happy I recorded that video. Shout out Hugh G. Shout out Hugh G, bro. I don't know if I should expose him on the very start of the stream, but Hugh G shared the video on Reddit. And surprisingly, it didn't get as many views as I thought it would. Like, I thought Reddit was like thousands of bots, but it only got like a few hundred or like 200 or 300 views so far. So I'm actually pretty happy to see that it's not just bots in here. It's not thousands of bots. It's like actual people. But yeah, Burry paywalled his article. Hugh G shared it on Reddit. Shout out to him. What a guy. What a guy. It actually helps. Like, you'd be surprised. Sharing the stream, sharing the videos, it helps a lot. Like, this video is almost outperforming some of my Power Pack videos so far. So, you'd be very surprised at how much it helps, like, just sharing the stream, sharing a video. So, hopefully more people will do that, because it's pretty helpful. But, yeah. I'm a little upset he paywalled the article, because I wanted to read more of it. But I guess I just gotta watch my own video. And whatever. I think I downloaded all the things too. So that's nice. What's up, Unknown? You've been first here like the past couple streams. Appreciate you, bro. Appreciate you. What's up, Moose? Moose? How you doing, bro? So, that's probably what we're gonna do, is watch my own video and just talk about... I kind of just want to dive more in depth to the article, really. I read a little bit more of it last night before he paywalled it. But, I guess I can just go to my channel and should be here. Hey, look, there it is. Foundations, The Big Short Squeeze, Gamestop the Prequel by Michael Burry. So yeah, I just kind of want to go through this and analyze a little more, because all we did was read. We didn't really analyze much. And yeah, maybe we'll go through some of the documents. Let me see what I got here. Adobe Acrobat. Okay, I think I downloaded everything from it, so that's good. I thought this thing was interesting. Can I open it? Nice. Thank God it saved all this stuff. Freaking Burry, bro. Trying to paywall the article, Burry. This guy, bro. This guy. And GameStop is doing decent today. Kind of good to see. Especially with the whole market not doing great, and crypto. Crypto's really not doing the best either. So the fact that GameStop's up and the market and crypto are down, I feel like that's decent. I feel like that's a decent thing. Because if the sell-off starts to intensify in the market, maybe it won't affect GameStop as much. But who knows? You know, who knows? Who knows? You got Micron earnings later. So that should be exciting. At least it was last time. I don't even know what Micron's at. Let's see. It's down 3% today. And it's still like sitting at all-time highs. So that should be a good earnings. That should be a decent earnings. What's up, Sammy? Good to see you in here again. Good to see ya. Hope you're doing good. Let's see. Just waiting for some more people to come in before we start this, because the more people to talk about the article, the better. I feel like we'll get a pretty good conversation potentially. Ah, we got the bots again. Well, looks like it's going sub only. Looks like it's going sub only. Yep, we're going sub only, bro. I ain't fucking with that today. I ain't fucking with that today. Sorry to anyone who's not a sub and you are, you know, an active member in the stream. I'm not dealing with the fucking bots. They can go fuck themselves. They can go fuck themselves. I mean, realistically, it's just some fat loser in his fucking mud hut who thinks he's funny. Sorry, unknown. Sorry, bro. The bots ruin everything, unfortunately. Unfortunately, the bots ruin everything. Like, what a weirdo, bro. I knew it, too. I was looking at the chart, and it just spiked. Like, we went from, like, 3, 4 viewers to, like, 8, like, instantly. I'm like, yep, here comes the bots. And sure enough, they came. Fucking idiots. Ah, thank you. God bless you, Unknown. I appreciate you joining the membership, bro. I appreciate you, bro. Thank you. Thank you, Unknown. See, this will definitely separate. This will definitely separate the bots from the real people. You know, because anyone who's like a bot or just a troll, they're not gonna join the membership. But a real person is probably down to pay a fucking $1 to join the membership to avoid bots. Like, that definitely separates, because I'm pretty sure Yeezy's a bot. Sammy's debatable. Sammy's debatable. And then the other guy, of course. It's probably all the same person, realistically. But whatever. I don't know. You know, I don't know. I don't know who's real and who's not in this stream these days. But this is a good way to separate it. I'll probably turn it off later, though, once we get closer to the earnings, because the Micron people aren't going to join members, you know? But I'm just not dealing with the bots. I'm not in the mood for bots. Alright. I guess nobody's going to really come, so I'm going to start checking this out again. Tore a blade from my lawn, and without so much as a peep, launched it toward the moon. Unsure as to east or west, as that was not my intention, I knew where it would land. There next to the... What is that set? Like, there's some weird sound at the start of this video. I don't know what it is. It's so weird. Living, to die and feed the next generation, such is the trajectory of many, many common stocks. In a distinguishably analog manner, I know this Stacked in Science conference room are S&P stock guides for every month going back to 1968. I guarantee you have not heard of the vast majority of the companies in those guides. See, I really liked this part where he was talking about, I think it was in this article, where he's talking about how a lot of the big names in the market went bankrupt. Like, that is such a important piece of information, bro, because it just goes to show that there really isn't a lot of good business picks out there. Like, that is some solid information right there. For those that do not trust anything analog, since 1990, there have been over 750 replacements in the S&P 500 index. Google's Gemini 3 Pro swears by it. Claude Max agrees. Gemini 3 Pro and Claude Max further propose that 45% of the top 20 names in the 1999 NASDAQ 100 ended up bankrupt or acquired after a 75% loss. Oh, wow, that's very interesting. Yeah, that's crazy, bro. 45%? That's massive. That's a lot. That's a lot of that's a lot of companies. 45% of the top 20 names in the 1999 NASDAQ 100 ended up bankrupt. Like, that is a crazy thing to think about. Especially thinking today, because, like, history tends to repeat itself. What is the market going to look like 20, 30 years from now? You know, how many of the top companies that people are obsessed with right now are going to be bankrupt? Like, that is such an important stat. This is going to be a good article. This checks out my conference room says, capital is always fighting to be recycled. Thusly, you now carry the knowledge that most investors are best off in an index and have no need to invest in individual stock. I agree. I think I said that during the video, so I guess I don't need to repeat myself. If one is rather young and has 50 to 70 years left, then one absolutely should be almost entirely invested in common stock indices, preferably the S&P 500 or the NASDAQ 100, or both. Live life, touch grass, achieve real things, automatically reinvest dividends, and let the compounding of the index gods do the work. Maybe not this very day, but over time, this is the way for most. I agree. Most people shouldn't be stock picking because most people are not good at it. And you would make exponentially more just working and investing into the S&P 500. See, GameStop's a very speculative investment for me, personally, over the next 10, 20, 30 years. I'm expecting GameStop to outperform the S&P. That's the bet. Doesn't mean it's going to happen. You know, for 99.9% of people, you're better off just working and investing in the S&P. I agree with that. Notice how he said maybe not this very day on index funds. Well, he says, but over time, this is the way for most. Maybe not this very day, but over time, this is the way for most. I think the reason he put maybe not this very day is because he doesn't want people going out and buying the S&P 500 just because they read this. I think that's the point of that sentence. I don't think it's him saying, like, oh, maybe you should focus on something else today. I think that's just, him covering himself, like, not telling you to go invest. Maybe he sees a problem with index funds? No, because he literally says, if one is rather young, has 50 to 70 years left, then one absolutely should be almost entirely invested in common stock indices. Preferably the S&P 500 or the NASDAQ. Live life, touch grass, achieve real things, automatically reinvest dividends, and let the compounding of the index gods do the work. I don't think he's saying indexes. I don't think he's saying there's a problem. I think he's just saying don't invest just because of this article. Especially Burry's bearish right now. Burry's bearish on the market right now, so that could also be a reason why he put it, maybe he thinks the S&P 500 and the NASDAQ are going to be bearish for the next, couple years or something. So he's, I think he's covering himself with that sentence. I don't think he's saying there's, an issue with index funds or anything like that. I don't think, because, 50 to 70 years left. Like, he's saying literally, like, when you're 20, 30 years old to be investing in indexes, Like, that's literally what he's saying. Not many people live over 100. So he could also be saying, 40 to 50-year-olds, I guess, if he thinks the lifespan of humans is going to be longer. But I think and I agree with him, I think the indexes will, of course, there's been stocks that have outperformed the index. There's been a ton of stocks that have outperformed the index. But how many people actually picked those investments and stuck with those investments? Probably not many, The people who actually invest in the indexes, they tend to stick with the investment and continue to add to the investment no matter what. In my experience. But yeah, I don't think he's saying there's a problem with indexes. I think he's just covering himself, so someone doesn't go out and buy just because they read that sentence or whatever, or this paragraph. But obviously nobody knows, Nobody knows. We're just kind of trying to decipher what he's saying. It'd be nice if there was more people in the chat. I don't know where everyone is today. Maybe not this very day, but over time, this is the way for most. I agree. Most people shouldn't be stock picking because most people are not good at it. And you would make exponentially more. And just from my experience, any person I know who's like a market participant or a wannabe market participant, they're always trying to time the market. Anytime I talk with anyone about GameStop in the real world, it's always, is it going to go lower? Can I buy it lower? Whatever. Like, if you're just an index fund investor, you don't really care about the price, I don't feel like. I think a lot of people, not only are they bad at stock picking, and maybe they're decent at stock picking, Maybe they're decent at stock picking, but their opinion on the chart is a very big roadblock for a lot of people, because a lot of people think that just because a stock could potentially like be cut in half or something, that it's not a good investment, when that's not. I mean, that's a tough thing to argue against, because in some ways I could agree. If you're investing like $50,000 to $100,000 and there's a possibility the stock could be cut in half, I see a problem there. But if you think that stock's going to be worth exponentially more in the future, it doesn't really matter if it gets cut in half. It's just an opportunity to buy more. But yeah. So I think index investing is better for a lot of people, because a lot of people are like overanalyze, I guess. And they think they're like smarter than they actually are. But that's just from my experience. I don't actually know. But yeah, I'd imagine most index investors are doing exceptionally better than most stock pickers, or just working and investing into the S&P 500. See, GameStop's a very speculative investment for me personally. Over the next 10, 20, 30 years, I'm expecting GameStop to outperform the S&P. That's the bet. Doesn't mean it's going to happen. For 99.9% of people, you're better off just working and investing in the S&P. I agree with that. And I'm also a GameStop degenerate, so if I'm agreeing with that, there must be some truth to it. Of course, some of us just do not want easy. For them, well, their God gave them GameStop. What's up, Ruben? What's up? Say, that sentence is interesting too. This one right here. Some of us just do not want easy. For them, well, their God gave them GameStop. I never do easy, and I am 54. So that God has given me many more of GameStop's kind. Avanti 2001 and GameStop 2020 turned out well. Pillowtex 2002 and Taylor Brands, also 2020, not so well. From the beginning to the end of my professional money management career, I repeatedly did not do easy. These are not all I do, but on balance, I've been batting about .700, so I keep coming back. And there would be no GameStop if there was no Avanti. Trust me, I always do this. See, the Avanti investment's interesting. It's kind of interesting. Just because he talks about how he sold his Avanti investment too early, and like it would be worth over $250 million today. I don't know how much he invested, I forget, but like he repeats that with GameStop. When he gets to the GameStop part, he repeats that same thing. He's like, if I would have kept my GameStop shares, it would have been over $250 million. So I think there's a point in here potentially that he's maybe trying to tell you not to sell. Like I don't know, but it's a good takeaway from this article. But who knows? Avanti, third quarter of 2001. I looked up the stock of a company named Avant. I called it Avanti. Avanti made industry-leading electronic design automation, EDA software, for the design of semiconductors, and I was looking its way because the company had been found guilty of stealing source code from Cadence Systems. 5 of their executives went to jail. Shareholders dumped the stock viciously. It fell over 80%. I salivated. That overstates it. I thought it could be interesting. I called friends at Xilinx and Altera, 2 of the biggest fabless chip design companies of the time, also very local to me. I learned Avanti had best-in-class products, Apollo, Astro, the Milky Way database, but was not run by nice guys. I did all my research. There's no way he regrets it. He's a multi-millionaire. He doesn't give a fuck. He already has everything he wants. Or needs. I disagree with that. He doesn't have regret to it. He's trying to tell you his experience because it's relevant. It's relevant. People who sell their investments miss out on a lot of gain. And, not all the time, sometimes selling an investment is the right thing to do. But in the case of these 2 companies that have turned into juggernauts, for lack of a better word, he's saying, he's just giving you what would have happened if he would have held instead. But he repeated that twice in this article. So I think, that's just a big takeaway from the article is he's trying to get people to like potentially get in the mindset of holding forever. Potentially, I don't know. That's just a thought, We're just going over it, I'm interested in what you guys think as well. So please, if you guys have opinions about the things we're talking about, put it in the chat. Freeform in the Microsoft Notepad back then. Below are my first Avanti 10K skim review and my first Avanti conference call notes. I'm probably going to check those out later, but I just want to continue reading the article because it's a long article. The stock had fallen more or less 2 times free cash flow, and I started buying. I also called their CFO and arranged a call with a hard money financing firm from Notepad. My takeaway: CFO not savvy, AVNT not desperate, blank blank most interested in death spiral convertible. CFO doesn't know what a death spiral convertible is. I liked the stock. It had fallen to where it was trading at less than 1 year's free cash flow. It was heavily shorted. and well-known short seller Jim Chanos had been on the news pitching it as a short. It looked like Chanos was winning, but I kept buying. My thesis had nothing to do with the short interest, it was pure value, buying industry leading product at a discount to free cash flow. I wrote to Jim Clark, one of my best friends, then at the Brandywine Asset Management, now a poobah, director of fundamental equity research at Franklin Templeton. I guess this is what he wrote him, 100 million in FC. Yeah, I'm not gonna read these. I'm just gonna read the article. Whatever, I'll read it. Avanti still makes me feel like I'm sleeping with the village slut. No matter how well my needs are met, I doubt I'll ever brag about it. The quote creep factor is off the charts. I half think that if I pushed Avanti too hard, I'd end up being terrorized by the Chinese mafia. Give me a call later. That's such a weird email. Warren Buffett and Ben Graham had their cigar butts, so now you know what rhymes with butts. I didn't pick up on that one. Instead of cigar butt, it's the village slut. That's hilarious. I didn't pick up on that until now. I wish he didn't paywall the article, though. I don't really want to listen to myself read it, but whatever. I saw on a Hughie share there were some people talking a little smack. I bet they're happy I made this video now, I would have to assume. I do not speak like that, therefore is memorable, and Jimbo told that story to Michael Lewis, so she found herself on the pages of a bestseller. Luckily for me, she did not make it into Hollywood. What's up, Rosh? Hope you're doing good. The first 3 to 4 years at Cyan Capital, it was the Wild West. My letters to investors never identified the investments. As a result, my investors left me alone and appreciated the returns they earned by leaving me alone. No one knew about the village sluts, and nobody was hurt by not knowing. Cyan's Capital, quote, black box, was simple fundamental equity research, and it worked great. That is not the way of the hedge funds today, so it is. Avanti worked out, as I wrote in the Cyan Capital's investors in early January 2002. Within the quote third quarter letter, I explained that the fund had been averaging down, purchased something, I don't know what that says. Averaging down in a stock purchase during the quarter, which has fallen tremendously out of favor over the past couple months. I further explained, the future performance of this position will have absolutely no correlation with either the performance of the general market or further terrorist attacks. That's a piece I found very interesting, because that's how I feel about GameStop. This investment has no correlation with the market or any potential black swan event. You know, if the market crashes a lot, I wouldn't be surprised to see GameStop sell with it, but the investment isn't based on the current market. It's based on the future of GameStop. It's not even based on the future of the current market. It's not based on crypto. It's, I thought that part was very interesting, how it correlates. Because that's how I feel about it. At quarter end, however, the position sat at a low point, trading at a valuation of just 3/4 the free cash flow of the trailing 12 months. And unlike many businesses that have faded rapidly during 2001, this business achieved record free cash flow yet again during the first half of 2001. I will note that the prospects for a recovery in this position during the fourth quarter are wholly in question. However, over the next year or two, and especially over the next 5 years, there's a very high probability of substantial gains as a result of this investment. Such gains would be largely irrespective of the status of any economic recovery or lack thereof. See, that is so similar to GameStop, bro. That is so similar to how I feel about GameStop. Like, I don't know what it's going to do the next, like, couple years, but if you're looking out 5, 10, 20 years, there's a potentially high probability of substantial gains, just like this. Very interesting. The fund continued to purchase this security during the first days of October, while the security remained downtrodden. As it turns out, we did not have to wait 5 years or even a year or two. The stock tripled off its quarter-end lows by late October, Moreover, during early December, a competitor agreed to buy all of the stock of the company at a price that amounts to nearly 7 times its price as of September 30th, 2001. See, that part makes me think about that Twitter post where Ryan was with the Saudi dude. I wonder if Ryan got an offer for a buyout on GameStop, and I wonder how much that offer was. It makes me wonder if that was a potential thing. And I don't think GameStop's going to get bought out. I think this is going to be an investment that lasts a lifetime. So, that's also a huge benefit of being invested in GameStop, because your gains aren't going to get capped by a buyout. Having a 7x buyout, that's awesome. Don't get me wrong, but if you're looking out decades, I think we all want more than a 7x. I'm just saying. I think we all want more than a 7x. And we also don't want our stock to stop trading on the market. We want it to continue to trade forever. We don't want a buyout. That kind of sounds similar to GameStop, I suppose. But, time will tell. The Body of Science Capital's 2001 annual letter is available as a PDF at the end of this article. If you're interested, the letter captures what I was thinking in late 2001, as stocks recovered vigorously from the 9/11 tragedy, which had shut down markets. Avanti was acquired by Synopsys for a bit less than $1 billion in stock, and that is the real reason Synopsys had a 20% stake in SMIC, which it has been selling off for the last 3 years. Today, SMIC has a market cap of $84 billion, so that stake in SMIC was originally Avanti's, would be worth $17 billion today. I was buying Avanti in September of 2001 at a market cap of nearing $100 million. My shares in Avanti, if I held all the Synopsys shares I received in the acquisition, today would be worth over $250 million and counting. This investment even now could go on for decades. It's that, bro. It could still go on for decades. 250 million and counting. See, he maybe you're right. Maybe he does regret this investment. Maybe he regrets selling it. I don't think so, because Michael Burry's a multi-millionaire. He doesn't need more money, It would be good for his investors, of course. His investors would have loved that. But I don't think he regrets it. I think he's just trying to make a point that the right investment can continue to grow forever. I don't know. Free cash flow this year will be close to our Bitcoin investment. Nice. Yeah, I think it's going to be close to like 600 million. Or at least net income. I don't know about free cash flow. But yeah. It's pretty crazy. I wonder if they bought more on the dip, I wonder if they bought more at these lower Bitcoin prices. Yeah, that part is so interesting to me. Only said it because he did the whole article with details from a past investment, but I see what your thoughts are, I think. Yeah. I just don't think he would... I don't think that's the type of person Michael Burry is. I don't think he sells an investment and then, regrets it. I'm sure he thinks about it, I'm sure he tries to analyze why he sold, why he should have... I'm sure he analyzes his decisions, but I don't think that he regrets it. And I think he, like I said, I think he's just trying to make a point that a certain investment can grow forever. Because right here it says this investment even now could go on for decades. That's 1% regret. Yeah, I mean, of course, I'm sure he regrets it in some way, but he's not over there punching the screen, He's not over there punching the screen. He's just analyzing his investment. Synopsys and Cadence are essentially a duopoly in the software used to design semiconductors. Amazing that the bottom, Avanti, was left for dead at less than 2/3 annual free cash flow. That was no cigar butt. The village slut had become the Bella of the ball, and today continues to be a very celebrated and distinguished life. That was an interesting story. Anyway, yeah, that has to be the point he's trying to make. Because then he repeats it back when he's talking about GameStop. It's the same exact thing. I don't think he doesn't say that the investment could go on for decades or anything like that, but it has a similar story. And if you're looking at GameStop's fundamentals from today, it could be a forever investment, and it could just continue to go up forever. Back to GME. 2018, I am running through my lists. I spot GME, do some preliminary work, and I exclaimed out loud for my wife to hear, "Eureka, I found another village slut." I started dabbling in the stock during the summer of 2018. I noted GME's call options were very active. This type of thing would play a large role later, and actually, no, I did not say that to my wife. As an investor, not say that to. I want to see this chart. This is just the option activity, just random spikes in volume on the options. Using Roaring Kitty terminology in the video with cigar butt, and he's using Reddit terms in this article heavily. What Reddit terms? I don't know what Reddit terms you're talking about, but cigar butt's from Benjamin Graham and Warren Buffett. That's where that term comes from. To my wife. Mostly Benjamin Graham, because Warren Buffett learned from Benjamin Graham, so cigar butt is from Benjamin Graham. As an investor, my thinking on GameStop was that it should have gone away a long time ago, but it had not. I wanted to know why. PC gaming had been a major threat for many years, but the console cycle was still strong. The prior console cycle had peaked in 2014 timeframe, and the next console cycle was delayed to 2020. My only animus, Joe, noted GME was in trouble back in 2014, but we had not shorted it. A note about Joe, I had hired Joe as a chemical engineer out of Lehigh University after he had interned with me back in 2003. He took a break when I did and enrolled with a full ride at Rutgers School of Law. The first year he was diagnosed with glioblastoma multiforme, an acutely lethal brain cancer. He fought the cancer thanks to miracle surgeries at UCSF and finished law school top of his class. I eagerly rehired him in 2013 upon his graduation from law school, which he attended purely to become a better investor. Regarding GameStop, Joe was still skeptical in 2018 as he continued chemo, battling recurrent cancer. But I was now locking in on it. In 2018, I was looking for... What was this chart? Can't really see. That's one negative of him paywalling the article, is I can't really see the charts, but I think that's just GameStop's stock chart back then. Post-split, or pre-split, I guess I should say. Yeah, that term comes from Benjamin Graham. I know that for sure. Cancer. But I was now locking in on it. But yeah, I guess he does say to the moon in here. What else does he say in here, though? In 2018, I was looking for that console refresh in 2020 to boost the stock. I was early, I knew, but I usually am, and I thought I saw a number of catalysts. The stock seemed undervalued to me, it had a slug of cash, and decent cash flows for being so late in the cycle. Summer of 2018, there was a lot of talk from brokerage houses about GME potentially going private in a leveraged buyout, a possible catalyst. The company was also looking to sell off its Spring Mobile, a chain of 1,284 AT&T wireless stores, for a decent amount of cash, and I saw that as a potential catalyst. The company had roughly 350 to 400 million in owners' earnings each of the prior 4 years, 800 million cash, and about a 1.3 billion market cap, it actually screened well and was still cheap. That is always a warning sign in today's world.
Do you need $300? $1,000?
Man, I miss ad blockers. Company had roughly 350 to 400 million in owner earnings each of the prior 4 years, 800 million cash, about 1.3 billion market cap. It actually screened well and was still cheap. That is always a warning sign in today's world. What do you guys think he means by that? Actually screened well and was still cheap. There's always a warning sign in today's world. Is it a warning sign or is, well, because I guess GameStop did go to like 100, 200 million market cap or something. It went really low. So I guess maybe he was saying at this time it wasn't a good investment because of the market cap. Potentially. But 800 million, 1.3 billion market cap. Like, yeah, I don't know. That's an interesting sentence. I don't really know how to analyze that sentence. I don't really know what it says to me. Yeah, let's see if we can do this. Try this. See what happens. We'll see what happens with that. Yeah, I don't know what he means by that. Cheap. That is always a warning sign in today's world. You see, income had sagged in calendar year 2017, and that had brought weakness to the price. But I hypothesized it was typical late console cycle pessimism that would be remedied within a few years. Its significant cash flow and cash from the sale of Spring could play into a very big and consequential buyback, another possible catalyst. Still, I was not very convinced in the thesis. I kept the position small through 2018. Inventories were building in a bad way. They did sell off Spring Wireless for 700 million cash and a giant accounting loss later that year. And with that sale and surprisingly large fourth quarter inventory liquidation, cash jumped to 1.6 billion, about the level of its market cap. Activists arrived, but not as the cavalry, whatever, they might have been. Permit Capital Enterprise Fund and Hestia Capital Partners on March 13th, 2019, had sent a letter to GameStop's board following up a prior February letter. We are long-term stockholders in the company, Permit since 2011 and Hestia since 2012. Additionally, GameStop represents the largest holding for both funds due to our belief that the company is dramatically undervalued and has significant upside potential. We are not typically activist investors. However, the board's lack of meaningful response following Hestia's February 12, 2019 open letter to the board, a link that can be found here, and Hestia's considerable efforts to engage with the board have driven us to group together and speak publicly now. It is our goal to work constructively with the board to address ongoing value destruction at the company. However, this letter fails to elicit an acceptable response. We are prepared to take our proposals directly to stockholders and nominate directors for election at the company's 2019 annual meeting. The company recently announced plans to retire certain of its debt and approved a new share repurchase authorization, which appears to be in response to the February 12th letter. However, these measures do not go far enough in scale or commitment to result in meaningful change for stockholders. In order to reverse the company's prolonged history of value destruction, we believe it is imperative that the board be immediately refreshed with new independent directors with relevant experience to focus on optimizing business, returning capital to stockholders, rebuilding company leadership, and assessing the failed sale process. What's up, Varley? How you doing, bro?
Watch my snoring disappear in one.
Good lord, bro. So many ads. I'm watching ads on my own channel. Like, that doesn't even make sense. What's up, Muma? How you doing, bro? Asking the company to do buybacks, but with almost all the catalysts that I had expected played out, I sold my GME position to zero during the second quarter of 2019. I was puzzled at the relentless selling pressure in the face of seemingly good news, and decided maybe there was something I did not understand. I had relatively small losses and took them. Interesting. The stock kept falling, and then on June 5th, the stock crashed from $7.82 to $5.04 on bad earnings, an initially confusing steep drop in the cash balance. Immediately on June 7th, GameStop responded by announcing a modified Dutch auction tender for 12 million shares, roughly 12% of shares then outstanding, at a cash purchase price of not more than $6 a share and not less than $5.20 a share, $1.26 adjusted for splits. The stock closed at $5.02 on June 7th, 2019. I was interested again. A modified Dutch auction tender involves shareholders naming their price within a range, and the company chooses the lowest price within that range at which it can buy all 12 million shares. 48 million shares today adjusted for splits. I thought the stock would fall after the Dutch auction, and I was not happy with the amount of shares being bought back. I wrote only to myself as Joe was not doing well. GameStop announces intention to launch a modified Dutch auction tender offer. This should keep GME in this range until July 10th. I figure I might buy back in at some point, but not soon, and this buyback is 1/5 the size originally contemplated. So clearly they had heard from shareholders that they need to do buybacks, and they responded with this. And that is what happened. The stock stayed in a range, and then weakened after tender was over. All expected. Here I put 2019 into an anachronistic chart post-split, so you can see the prices and volumes on today's terms. Now that's it. I don't get how you see that they're doing the offer, even though they announced it. Probably would have just had to be there, unless it's those big spikes in volume. But they only did 12 million shares, so how would it do 100 million? Unless that was just a big day in the market. I don't know. That's weird. Interesting. What's up, Hugh G? On July 15th, 2019, I bought back into GME with both hands and made it one of my larger positions. I had a brand new thesis. Yes, I brought along most of the points of the prior thesis, and I had been eyeing their hard assets such as real estate, thinking of sale leasebacks as sort of a cash. Those amounts do not look like a lot, but the market cap was only about 400 million. It had over $500 million in cash, and I was Sherlock Holmesing every nook and cranny of extra expense or hidden assets or liabilities. I also took aim at their corporate jet. They do disclose the plane in their Def 14A form, still it needs to go. However, the new thesis, in addition to apparent undervaluation, regarded a potential catalyst in the high short interest. 74% of the stock's outstanding shares were shorted, and that was rising fast. I felt a buyback of size could work magic. They had retired 12% of their shares in response to earlier pressure from both me and Hestia and Permit. I thought they had room to do more, and more importantly, might be amendable to doing more. GameStop had unusually high volume during that summer, and that could help a buyback of size get done quickly. Another way of think of 1/3 of share, 30 mil, were tendered in the Dutch auction over a month in which 236 million shares traded, 2.4x the outstanding share count. Who is tendering? Brand new shareholders? Typically, it would be institutions that can't easily sell in the open market, but the open market gave a lot of liquidity to sellers. 236 million shares were bought. It's extraordinary the numbers here in many ways. A massive amount of the share base turning over with increasing speed got me thinking and triggered my big buy on the 15th of July. I had been invested in Overstock.com over a decade prior when naked short selling became a very big and controversial concern. Very high volume, many alleged comes with naked short selling, more on this later. I also took time to assure my whole team that I wasn't crazy. So you all know, I am not just a moth to flame, I do not think. I visited a GameStop store to make sure I was not crazy. It did not work. Even the stuff that was not on sale looked like it should be on sale. On July 28, 2019, I wrote to GameStop's board of directors, focusing on the opportunity to buy back a massive portion of their company very quickly due to the high volume. Below is an excerpt. That's actually interesting to think about. Very interesting. Could be a reason why they're not doing buybacks right now, because if you ever get massive volume again, they could do it all in like one day.
The body scanner reveals the
Fucking, how am I watching ads on my own YouTube channel? It doesn't make any sense. A goal. It doesn't make any sense. Girl Scout Thin Mint pretzels? Interesting. I'm not a big Thin Mint guy, but that sounds kind of good. That sounds kind of good. Yeah. I just can't wait for the more up-to-date article. Like, it's cool reading about the past of GameStop and what he thought, but I can't wait for the actual article of today's analysis. What's the stock doing? Rejecting 22.8 a little bit. Still holding up nice though. Let's see. I wanna see something real quick. I want to say something. All right, let's continue. I don't even know if that's a goal, but, or even if it would be useful. It's a totally different investment now, but pretty interesting to think. I've talked about buybacks in the past, but I don't think they're relevant. I really don't, unless the stock goes to like 15 or something, you know, then buybacks would be relevant, but I think it's better to keep all the cash in the business. Think about that. We suggest you will never find an easier or safer opportunity to double or triple GameStop's earnings per share while increasing tangible book value per share by more than 100%. This may be accomplished simply by completing the 300 million share buyback the board authorized earlier this year. Given the market cap of GameStop at 362 million as of July 26th, completing the authorization would retire about 2/3 of GameStop's outstanding shares. This would triple earnings per share, as a denominator would be 1/3 as large. The numbers are striking and demand action. As of July 15th, 2019, Bloomberg reports short interest in GameStop stock at 66.9 million, basically. This is about 74% of the 90 million outstanding GameStop shares. Again, per Bloomberg, as of July 26, 2019, S&P Capital IQ as of July 26th reports GameStop has the highest short interest as percentage of outstanding shares among all common stocks trading in the United States at a price of greater than a penny per share, and it is not close. We do not recommend public comments or disparagement of short sellers. In our view, shorts are part of a healthy market. However, stocks with high short interest tend to have high volume relative to the shares outstanding, and GameStop is no different. To an extent, this enhances the current opportunity. Interesting. To be honest, I believed that because of the book. I agree with that as well. I think short sellers are great. A lot of people hate short sellers, but like someone betting against you, especially in the market, that just gives you more upside, more potential upside. So short sellers are, please short the stock more, please. Book and movie, my name and that of Cyan would potentially create a stir among shareholders and possibly even management. Perhaps I thought they would take this suggestion seriously. And then tragically, Joe passed away August 4th, 2019. Rest in peace, Joe. You were one of the greatest intellects this world has seen. Life cut far too short. I still pray for his kids. 10 days after Joe's passing, I returned from the funeral in New Jersey. I sat down at my desk, paused for no small reflection, and started buying more GameStop shares. The letter stimulated many emails from GameStop shareholders.
It comes in a heart-stopping red rose
Fuck
surprise
off,
box.
dude. There's so many ads. What are they doing, bro? Holy shit. So many ads on this, bro. Where's my ad blocker, bro? Crazy. When do you think part 2 will come? I have no clue. I just hope it's unlocked. I hope he does the same thing. I hope he leaves it unlocked for like 24 hours and then locks it. Because that benefits me in my... I think so, you know? Because now people can't go and read it. So they have to watch my video. Or they have to search the web for every part of an hour-long article. Which, good luck with that. So I don't mind that he locked the article. But I hope the next one's unlocked. At least for 24 hours. Oh shit. As I did not want to form a group under SEC rules. If I, and even one other shareholder combined for over 5% of the shares, and we did not file a Schedule 13D, we'd be subject to SEC enforcement actions. So when Keith Gill emailed me, he was just another GameStop shareholder to avoid. I ignored it like all others. I cannot regret it because I was in that mode. I did not know who he was, or that the Keith Gill had emailed me until the SEC investigation later in 2021. Interesting. Very interesting. This is Keith's email. Dear Mr. Burry and team, thank you for writing the open letter to the board of GME. As a deep value investor, I share your views wholeheartedly, especially with regard to the board's inaction over the past few months, in the face of an absurdly low share price. I'm a CFA chart holder with roughly 10 years of experience as an independent investor, and I haven't seen anything like this before. As you know, usually such price action characterizes companies that are on their way to bankruptcy. Indeed, technical analysis has benefited me the most by steering me clear of such companies. Yet these past few months, I find myself averaging down into the equity and leaps of a company with one of the ugliest POS charts I've ever seen. It's times like these where my value-first mentality manifests most clearly. A month later, unbeknownst to me, Keith Gill launched his Roaring Kitty on YouTube. He began posting his GME thesis and talking it up in August 2019. I engaged with the company after the first letter, but it was superficial, and I did not get the sense I would get the action I wanted. I agreed to a short interview with Tay Kim at Barron's. Big short investor Michael Burry now going long on GameStop. I don't know if I think this is just the introduction to it. I don't think that's the actual article. He probably has the actual article, but it says with GameStop stock down so much this year, Burry thinks an opportunity time for the company to buy back its shares. He noted there be mechanical selling by quant-oriented funds because of the new lease accounting guidelines that went into effect earlier this year. The new guidelines drove GameStop's leverage ratios higher, he says, while nothing has changed fundamentally. Technical factors driving the stock to lows has created an opportunity for substantial buybacks at below private market prices, Burry said. There's no better use of capital than buybacks. Scion letter noted the short interest for GameStop represented more than 60% of the outstanding shares. On August 26th, I sent another letter to the board of GameStop. excerpt below. Maybe because of Joe's passing in the interim, I was in a fighting mood. Cyan calls on chairman of the board, Daniel D. Mateo, to request the resignation of the 4 longtime board members listed below: Jerome L. Davis, Gerald Shapansky, Lawrence Zalevi, Stephen Koonin. GameStop does not need ghosts of the past protecting a legacy of poor capital allocation and thin oversight at this point in time. These 4 directors oversaw and rubber-stamped the ill-fated transformation of GameStop from the leading global physical video game retailer into a global family of specialty retail brands by building online and digital platforms and expanding the company's efforts beyond the video game category to include a portfolio of AT&T Wireless and Apple Technology retail brands through its acquisitions of Spring Mobile and Simply Mac. As stated in GameStop's Form Def 14A filed on May 12, 2017, the board appears to have fiddled while Rome burned. Back in 2014 and 2015, there were assets and strategies available to GameStop directly within its wheelhouse. Instead, Amazon and others with more insight took advantage and burglarized GameStop's wheelhouse, while GameStop focused on the diversification transformation. Several of the board of directors started buying shares during September, perhaps in response to my media and letter campaigns. I was monitoring trading in GameStop closely. I monitored the stock for signs of buybacks, and I watched patterns companies cannot buy back stock from 30 minutes before the close. For instance, I deduced GameStop was buying back stock, and they were doing it through Merrill Lynch. I used Excel to record in real time both the buyback and the effects on Cyan's ownership percentage on excerpt below. How does he know that? I mean, I guess... Total volume, 4.7 million. I don't know how he would know that they're doing buybacks, though. I guess maybe when you stare at stock charts long enough, you can see it, maybe. But I don't know how you would know that. Shares out. Yeah, I don't know how he would know that. I'm not going to go through that, but... For example, my 3.1 million shares were 5.37% of outstanding based on this running tally, but I was still officially under 5% from the SEC's point of view. GameStop arranged for its executives to fly to California to meet with me. Before that happened, I was contacted by Ryan Cohen in early October 2019. Our boy.
I want. Is Ted Phillips up to date on his
How many
training?
ads am I going to watch on my own stream or on my own video? Hi, Dr. Burry. Hope this message finds you well. My name's Ryan Cohen. I'm the founder and former CEO of Chewy. I'm also a large holder of GameStop and have enjoyed hearing your thoughts in recent interviews. I'd love to jump on a call and talk about the company with you. Best, Ryan. Ryan and I talked for about 2 hours, mostly not about GameStop at all, since neither of us wanted to form a group under SEC rules. I enjoyed the talk, which went in many directions. I liked Ryan a lot. Ryan struck me as a deep value investor. He explained he takes very big positions and waits. The Wells Fargo investment at the time seemed like it would be a long wait due to the asset cap, and he did not care. This is partly the freedom of not running money for others. Personally, I hold stocks a lot longer than I do when running a hedge fund. It's just the nature of the beast, and many other managers are the same way. I actually really agree with that. The account I manage, I don't really like being a GameStop holder in it. That's why I trade so frequently, but I just, I feel the same. Like, I don't really care what happens. I'm going to keep buying when I have money, and we'll see where the future takes us. I guess I should reiterate that, like, in my personal account, I'm going to hold forever, but in the account I manage, there will be profit taking along the way, most likely. Who knows how it's going to play out, though. But Ryan struck me as a more patient than most. Ryan seemed young. I believe he possibly had the temperament to be the next Buffett, but I did not get to know him that well. We did not talk again. I was surprised when he took the stake and position he did. The next Buffett, man. The next Buffett. What's up, Rosh? What's up, Rosh? How you doing, bro? The next Buffett. Ryan Cohen, the next Buffett, huh? That's interesting. That's interesting. Appreciate you all being here today. Still got like I don't know what time it is. Yeah, we still got like an hour, over an hour until Micron earnings. So we'll just be chilling. I met with Gamestop management on October 21st of 2019, and I discovered both George Sherman and Jim Bell were veterans. Otherwise, the meeting did not achieve much. I liked them as people. As a result, Hestia Permit and then my pressure, GameStop bought back 38.1 million shares during fiscal year 2019. The average price, just $5.21 a share. That is $1.30 today, adjusted for split. 37% of the company's shares retired in 1 year at $1.30. Shareholders today should appreciate that. At the time, I was satisfied. The stock did nothing. Yeah, that's awesome. See, that's crazy, bro. It's crazy that they bought back 30% of their shares and the stock literally didn't move. Like that sentence right there goes to show how, in some ways, buybacks are useless because they don't really affect the stock price. Like if the market doesn't see it in a positive light, it's gonna continue to trade at the same price. So I think that sentence right there definitely shows that buybacks today probably isn't a good idea. I think it's better to keep all that money in the investment straight up. But I don't know. Let me know what you guys think. That sentence stands out. Great earnings, nothing. Yeah, they talked about that a little earlier, how their earnings were growing, but the stock wasn't moving. So it just goes to show that a lot of this stuff really doesn't matter. Like the market's gonna react whenever the market reacts. Like there's no catalyst or news event or 30%, 7% buyback of shares that is gonna move the stock price. The stock price is just gonna move when it's time. Awesome. There was no short squeeze, and the very high volume continued. Throughout 2020, average volume was about 15 million shares a day, a little less than 25% of shares outstanding. In today's terms, that would be 60 million shares a day. The short interest in GameStop trended up through 2019, and I remained at a high level throughout 2020. In March 2020, GameStop announced some board changes that followed my recommendations. Also, the volume's so fucking low. Like, how would they even do buybacks if we're being straight up? Like, the volume barely ever gets over 10 million. Unless, there's like random days where you get decent volume, but the volume is so trash on GameStop, it would be hard to do a buyback. It'd be really, or a meaningful buyback. It'd be hard to do a meaningful buyback. Like the last time you've really had any sort of decent volume was back September 10th, but the stock was trading at $25, and they're not going to do a buyback at $25. They're just not. So that could also be a big barrier of buybacks today. I don't think it's worth it, I don't think it's worth doing. MU up 15%? No, it's not. It's down 3% today. What are you talking about? What you talking about, bruh? It's literally down 4% today. GME reorient. Let's see. Also, every single member I requested to retire is retiring. All four: Jerome, Gerald, Lawrence, and Steven, as well as the chairman. Another board member is retiring as well, and they're adding 3. Jerome is not leaving until June 2021, so the board will increase in size, then shrink, with a net change from 11 to 9. I read that wrong, but whatever. Oh, -2 from 11 to 9. I just spoke with the CEOs and CFOs, and apparently they did do this in response to my requests. They wanted to make sure I knew I was heard. Pretty crazy versus what it took to get any changes during Scion Capital days. Damn, 11 people on the board? That's crazy. That's crazy thinking about that now. Like, there's, 5 people on the board? They had 11? This was a non-event as to any short or long thesis dynamics. Short interest remained at all-time highs, and the stock did not react. In fact, in April 2020, the stock fell to a new low of $2.57, 64 cents today. It was interesting, though, as J.K. Sinmack, the CEO of PetSmart at the time, joined the board, as well as a former Nintendo president and former Walmart US CEO joined the board, but JK was interesting because of the potential connection between JK and Ryan Cohen. PetSmart had bought Chewy in May 2017 for $3.35 billion. Ryan ran Chewy until March 2018, and JK arrived as CEO in June of 2018. I was minorly thrilled at the board additions and the resignations. I never spoke to Ryan about JK, however. I continue to hold my position. GameStop's attention shifted to strengthening the balance sheet and reducing debt with cash flow. I agreed with that. There was a little dust up with the board, Scion and another activist during the summer of 2020, but not relevant here. On August 28th, Ryan Cohen's firm RC Ventures filed a Form 13D with the SEC. At the time of the filing, there were 65 million shares outstanding. Ryan owned 5.8 million of them, and I controlled 3 million. I was just below the filing threshold on purpose. I had already made my splash a year earlier to no real impact on the price. I did not want to go over 5%. I also traded a portion of my position around, something I do when stocks are in the doldrums for a while, and did not want to have to file after every trade. Ryan was well above the threshold with a purpose. The D in Form 13D, as opposed to 13G, meant Ryan was free to influence management. As well, that was his money, and there was a lot more of it. My firm was never that big because I did not market it. Chewy.com had IPO'd a little over a year earlier. I imagine he was coming with another big bet, and with his patience in tow. So that's an interesting part too. It was his money and there was a lot more of it. That's kind of interesting. I don't really have anything to say about it, but just kind of an interesting thing. Clear. I imagine he was coming with another big bet, and with his patience in tow, GME shares jumped over 20% the next trading day. Ryan was 35. The average age of the millennial retail trader was, you guessed it, 35. Chewy.com was a big beneficiary from COVID. Retail traders might not have made it a meme stock, but they either owned pets or knew someone who did. In 2020, millennials were 32% of all pet owners. The pandemic puppy became a thing. It was as if COVID was created for Chewy.com's IPO lockup expiry. That's pretty interesting. Wow. What? That's actually insane. That's an insane suggestion. The increasingly frenzied speculation over Ryan's motives hit another level with his November 16th letter, badgering GameStop into a new technology forward direction. Ryan's letter stopped short of recommending a comprehensive strategy, but made clear the company needed to become more technologically with the times. He intended to push the company in that direction. Taking the right steps in 2020 and 2021 can enable GameStop to own a bigger share of the market when estimated industry sales explode to more than $200 billion per year in 2023. We contend the company's sales should be growing at least in line with the market, not going in the opposite direction. Significantly upgrading e-commerce can provide for greater revenue capture across larger gaming catalogs, digital content and community experiences, online trade-ins, streaming services, and esports. We urge GameStop to adopt the right roadmap to create value experiences. Damn. Digital content, which they're doing, gaming catalogs, which they're doing, community experiences, which they're doing. They haven't done online trade-ins yet. They haven't done a streaming service. Dude, what if GameStop does a streaming service? That'd be crazy. That would be crazy. That'd be interesting. I wonder if it would be like a gaming streaming service, or would it be like a YouTube type thing where GameStop creators could create on GameStop's streaming service. That's kind of interesting to think about. Online trade-ins would be a good idea too. Might be a pain because of like shipping and stuff though. I think shipping's a huge barrier there. Shipping is expensive. Streaming services and esports though. What GameStop creating an esports team would be cool, but I don't think esports teams are profitable, so I don't think that's a good idea, besides maybe like the marketing aspect. The marketing aspect would be the only thing that makes sense because it's not profitable at all. But a streaming service could be interesting. Online trade-ins, streaming services, and esports. We urge GameStop to adopt the right roadmap to create value creation now. RC Ventures hopes this letter provides the board with a clear sense of GameStop's addressable challenges and clear opportunities. We have stopped short of outlining a detailed turnaround plan in this correspondence because the onus is on the board and Mr. Sherman to do their jobs and produce a viable strategy. In this spirit, we urge you to quickly provide stockholders with a credible and publicly available roadmap for cost containment, prioritizing profitable retail locations and geographic markets, and building the e-commerce ecosystem gamers deserve. Please be advised that RC Ventures is not interested in receiving a lone seat on GameStop's 10-member board. It is not enticing to become an isolated stockholder advocate on a board that has overlooked years of digital revenue opportunities and presided over massive value destruction without assuming full accountability. We want GameStop's leaders to do their job and implement a strategy for bringing the company into the 21st century. Sincerely, Ryan Cohen. The first 3 days of trading after the letter, the stock did not move at all. Heard inside Cyan's offices, everything Cohen suggests is either already being done or highly speculative in nature. I did not say it, but I agreed. Then the stock took off. And by month's end, Cyan was out. Agreed. Let's see. Letter to the board. Okay. Dude, that's crazy. That's interesting. Then the stock took off. And by month's end, Cyan was out. Coming to the end of 2020, I had carried my full GameStop position, 3 million shares plus or minus, through 16 plus months. Most of that time, I lent my shares out at very good rates, high double digits, which was lucrative and a big part of the trade. I did not believe I have ever earned so much simply being short a stock. Of course, far less than if. Wow, that's actually so interesting. The chart below represents Cyan's time holding GameStop as a top long position in the fund. Wow. I think it's weird that he loaned out his shares. Like, I guess... I mean, it kind of makes sense, I guess. If you want consistent income, it would make sense to loan out the shares. But pretty interesting. Would that be relevant today? I don't know. Well, that's very interesting to think about. My average cost on those shares was $3.32, equivalent to 83 cents today. When it really started to run late 2020, I sold the position at an average price of roughly $13.50, $3.38. Wow, dude. Holy shit, buried it, paper handed it, bro. Burry has paper hands. Burry's fucking origami hands folded, bro. His origami hands just folded. The short interest as a percentage of float when I exited was about 128%, not too different from what it had been for much of the prior year. Volume was rising, bringing down the days to cover ratio. The short interest, however, stayed elevated at its July 2019 through 2020 levels on into January 2021. I could have analyzed that situation better. I knew GameStop inside and out, and I thought I understood the volume, short interest, and other dynamics. However, I was blinded by what I saw as execution risk. As well, I am human. I had seen buybacks shrink shares by a third in the setting of 100% short interest, and the reorganizing of the board of directors, and the selling of Spring Wireless for cash in amounts of more than half the market cap, all were home run / slam dunk activist successes with concrete results but zero impact on price or short interest. The narrative on GameStop was just that bad. I figured that had already been wrought was more concrete than a vague technology forward makeover with a ton of execution risk. So I used Ryan's unveiling as an opportunity to close out. I had no idea what was coming. I had no idea that a roaring kitty existed. And I had no idea that a widely distributed gamma squeeze would thread the needle to become one of the only legal market corner. I wonder why he didn't scale out. Like, why did he take his position to 0? Just because of that announcement. Maybe it's based off of fundamentals. He thought it got overvalued. I don't know. But why wouldn't he sell, why did he sell the whole position? Wouldn't it have made sense to keep a little bit after a gain like that? I don't know. See, that's weird. If I made 100-200% gain on a stock, I'd probably keep some of the shares. Especially if you had 3 million shares. Why wouldn't you keep at least 100,000 or something? You didn't need to do anything crazy. Maybe having that small of a position in the fund isn't worth it. Maybe it's not enough exposure to make that worth it. But I don't know, that seems weird. It seems weird. Why did he sell the whole position in one go? So I did not think more about it during the fourth quarter of 2020. I had other worries. We had dropped a very large separate account due to a management change on their end. That account was over 25% of our assets and required sales across the... He also could have sold covered calls. I bet the covered calls were expensive, potentially. I don't know, I don't remember, but yeah, I don't know. That's weird. I don't get why he sold his whole position. Portfolio as we approach year's end. During 2020, we basically doubled their money, but no new money was coming in as I just did not market. Congratulations on the excellent year. You always thrive in chaos, and 2020 wasn't anything short of that. It's just his stats on his fund. The withdrawals came in from others as well. They needed cash to pay taxes on the gains. So I was in selling mode across my portfolio in November, December, and January, and therefore on the sidelines when, quote, it happened. The big short squeeze. About 50 or so days after Scion got out of GameStop, that ignominious crappy business that I thought was just a, GameStop, was the belle of the ball. The entire world could not take their eyes off her, and neither could I. On January 13th, 2021, she broke definitely out of the teens and touched almost $39 a share on 144 million shares, 576 million today adjusted for split, on a stock with 67 million shares outstanding. I did not believe I had seen that before. The stock then went sideways on falling volume for about a week. If I had not already sold, I would have sold that. At the peak, my years-long investments might have turned 12 million into a billion, but that was never a possibility. I also noticed those GameStop call options with crazy volume again. July of 2019, I had noticed call options trading as well as an abnormally high volume in the stock, both out of line with anything that came before. It was discussed here about 2,000 words ago, but in January 2021, volume was 10 times bigger on both share volume and call activity. The gamma squeeze. What was happening has been well described, but for those who have not heard it yet, I will go over it briefly. Retailer traders in the thousands, egged on by Roaring Kitty in online discussion, bought massive volumes of calls, orders of magnitude more than typical volume. See, I disagree with that part, though. Roaring Kitty did nothing. He literally just does what I do. Literally. Like, he never told anyone to buy GameStop. He was just public about his investment and what he thought about it, and researched it live, and posted his position on Reddit. Sure, massive position, but I don't know how he egged him on. I don't really get that part. The other side of that trade were market makers, hedge funds, prop desks. The two biggest by far were the market makers Citadel Securities and Virtue Financial. Those two have the capital required to sell that volume of calls. This is where the Greeks come in. It is not my game. I hate the Greeks, the symbols, not the people, but they played a big role. Only part I'm confused about is why did he tweet was complicated with GME? I wasn't done in Q4 2019, yet the post makes it seem he was. Because just because you sell a position doesn't mean you're not still tracking the position. He might have sold the position because he was, for his investors. He wanted his investors to have a good year. There's plenty of reasons why you would sell a stock, but it doesn't mean that he stopped tracking the business. When Citadel or any market maker, just because he sold it at, $3 or whatever the fuck, it doesn't mean that he can't buy it again. Like, there's no rules in this market. Just because you sell a stock at $10, $15 doesn't mean you can't buy it back at $20, $25. Sure, it's not what most people do, but there's no rules in this market. You can do whatever you want. Sells a call. Yeah, he did say that as well. He was unloading across the board at the time for his investors so they could pay taxes. Yep. It buys stock in the open market in an amount such that the entire position is delta neutral. Delta reflects the sensitivity of options to stock price movements. A delta of 1.0 is unity, or 1-to-1 movement between stock and option. Gamma is the slope or rate of change of delta. As gamma increases, it makes intuitive sense that it would be harder to maintain a balanced delta neutral position over time. Gamma fights attempts at delta neutrality. When a market maker or dealer sells a call option, it becomes short gamma. This is normally not a problem. It buys stock and manages towards delta neutrality. But the coordinated buying of calls by thousands of retail traders all at once created systemic gamma exposure across all dealers at the same time, leading to a systemic rise in short gamma. This made it very hard to maintain delta neutrality. To restore neutrality, all the dealers had to buy stock at the same time. And that is why a big part of what happened in GameStop stock is called a gamma squeeze. The success of these retail traders was not lost on others, and the lightning spread. Not just GameStop, but other stocks, AMC, BlackBerry, Hertz, and even Tesla. I've never heard anyone explain it this way. I think that was a good explanation. Usually you just get, it's a gamma squeeze, but he went into a good amount of detail of why it happened. The cornered market. Fairly quickly, I realized I was watching a legal market corner. Traditionally, a corner is when a group of investors buy up enough supply of a commodity or investment security to artificially drive prices higher and in many cases squeeze shorts. Very common in the days of railroad stock bubble. Yes, there were shorts back then, a lot of them, not sure how many were naked. With GameStop, specific forums online with pseudonymous leaders actively promoted the gamma squeeze as a way to get the shorts, and it was given the cape of righteousness, retail sticking it to Wall Street. Wall Street, of course, spends all its days sticking it to each other, but that is populism for you. If a hedge fund or group of hedge funds did the same thing, executing a continuous days or weeks long gamma squeeze, it would have been illegal. If a couple of non-Wall Street people had the capital to do it, same thing, not legal. Distribute the coordination broadly enough, and it becomes just a free market, which in turn makes the corner pointless with no advantage. However, say a few thousand do it, maybe as a collective they find the sweet spot of distributed coordination where it works like a corner, and it is by default legal simply because enforcement is impossible. The market asymmetry continues with no enforcement, and the corner works. The SEC just said, no thank you, carry on, carry on. Kudos to retail for threading that needle. I do not believe that this has been seen before. Once done, it spread like lightning. COVID gave retail traders personal time at exactly the point Roaring Kitty and Ryan Cohen took the mic. Then came the COVID checks. Naked short sellers, ? Going back 20 years, naked short sellers entered my field of vision when I was long overstock and took an activist stake. It was contentious. I had nothing to do with it, but I was actually sued by a short seller for being long the stock. Interesting. His name rhymes with Cohodes. So I know how dirty this whole game can get, but contrary to popular belief, I believe most of that 140% short position in GameStop was not naked shorts selling, but rather simple legal layering of trades. When a stock is borrowed from an owner and shorted to a buyer, who then in turn lends the shares for shorting, a cycle is created and repeated. And if demand for shorting is high, the cycle will become a fairly elegant and long sequence. Most of the exposure in that chain/sequence are actually synthetic positions. Sounds terrible, does it not? But it is all perfectly legal and correct. Every one of those transactions in the sequence is recorded and properly settled. The wiring of the market deals with just fine during normal times. I mean, don't say that to Reddit, bro. Reddit. It's crime! It's crime! It would take a very big volatility event to upset the apple cart. The humans working this are not idiots. GameStop was unprecedented, though. All that layering, all those synthetics, had to be unwound with urgency at the same exact time. The beautiful sequencing broke down. Dealers have temporarily exemptions to be nakedly short, which also is not usually a problem, but for when a correlation event like GameStop happens, this is what happened with GameStop. All that call buying by retail created the aforementioned gamma squeeze, and the layering became a mess. It was resolved by panic buying. Professional fund managers and short sellers were caught out in this way. Identifiable real shares became scarce, and the urgency to cover grew. No shorts had to be naked for this to happen, and I'm sure there were some, but naked short selling was not a prime factor. Oh, Reddit would say otherwise. Reddit would say otherwise. Plus CS le meme. So there was a lot going on inside the big short squeeze. It was spectacular. It was hilarious. It was tragic in turn. Middle of 2021, I thought it was less fun. Meme stocks had become an almost sober investment strategy, egged on by newly celebrated celebrity CEOs. 2021 is when NFTs soared in value along with watches, shoes, just about everything. Several, shall I say, village sluts were partying like it's 1999 and thinking of selling billions of dollars of stock in their beauty, sure to depreciate. GameStop sold over $1 billion in stock at $225 a share. Absolutely a smart move, but man, I just thought retail was going to be shredded on this meme thing. Just mind-blowing this is happening versus my mindset for almost 2 years, and retail bought it up. They sold directly into the market. GameStop jumps after raising $1.1 billion in stock sales. The video game retailer sold 5 million shares via Jefferies. Shares surge as much as 11% in pre-market trading Tuesday. This is just an old article. GameStop Corp climbed in pre-market trading Tuesday after announcing that it completed an at-the-market offering program by selling 5 million shares for a total of $1.13 billion via Jefferies. Shares of the video game retailer surged as much as 11% to $223 in pre-market trading after the announcement. It will use the net proceeds from the offering for investing in growth initiatives and maintaining a strong balance sheet, the company said. GameStop shares were sold for an average of 225.2 based on Bloomberg's calculations. Above the... That has to be one of the greatest buybacks in history, right? That shit's crazy. Alright, later, Rosh. What's up, Cat? Stock's 50-day moving average of 193.09. The total amount of shares sold represents the full capacity of its ATM authorization. It had announced on June 9th that it planned to sell as much as 5 million shares via an ATM offering. I had been on the sidelines, but I felt I should speak up. I gave an interview to Barron's in late June, honestly trying to warn people. Interesting. Interesting. It's crazy how many people bought the fucking top of this shit, though. It's wild. It's kind of the same with AI right now. Potentially a bunch of people bought the top, and they're about to get Omega clapped. Maybe, who knows. Hey, thank you guys for all being here. Appreciate you. This was July 1st, 2021. A crash is coming for meme stocks, Michael Burry says. Long before retail investors on Reddit flooded online forums theorizing about GameStop, investor Michael Burry spotted an out-of-favor stock that was misunderstood. Now Burry says he sees shades of 1999 and 2007, periods of other market frothiness. I don't know when meme stocks such as this will crash, but we probably do not have to wait too long, as I believe the retail crowd is fully invested in this theme, and Wall Street has jumped on the coattails. We're running out of new money available to jump on the bandwagon. Burry, whose successful bet against the housing market ahead of subprime mortgage collapse made him a prominent character in the book and the movie Big Short, believes the meme stocks are the latest Wall Street trend that could wind up hurting regular investors. He said that in 1999, everyone making money in .com stocks believed it would continue. In 2007, those making money, quote, leveraged to hilt in multiple homes, thought that would continue too. You know, that's a good... Hopefully my power doesn't go out. It's like windy and as fuck outside right now. It's storming. So if the stream randomly ends, that's probably why. Good point. A lot of people did get wrecked. People wonder why I do this, but if there is one thing I wish I could have done, it was to have effectively warned or spoken about what was happening in 2005 to 2007. I think I did myself no favors not smiling during that walk in front of the camera. Berry forever. I was early by Berry. I just don't know how to read apparently. Much less than I usually am. AMC collapsed from there. Others peaked a month or two later, but by 2023 they had all fallen, and I thought the meme trade was dead. I hope some listened. In any event, here is GameStop in 2025 with a market cap near $10 billion. Yeah, sadly, probably nobody listened because that's around the time you got a bunch of fake traders and YouTubers talking about GameStop like they actually know anything about the market and clapped a bunch of people. But that should be a learning lesson for a lot of people, I'd imagine. Or they've never looked at the stock market since then, which is highly possible. On the surface of it, given my history with GameStop, that number is stunning. not only relative to what I was paying for the stock and what the company was worth just a few years ago. If I had held GameStop this entire time, my investment in GameStop would be worth $250 million, roughly the same amount my Avanti investment have become over 25 years in the hands of a very good duopolist in the semiconductor industry. Wait, so he bought 3 million shares at what was his price? I forgot. I think it was like 3. I don't remember. Let's say it's like $2. So he had 6 million into 250 million. We'll say. Just an estimate. I don't really exactly know. I mean, that's a 41x in 25 years. Shit. Wouldn't that be nice? GameStop has been run for some... Oh, wait, that was Avanti. GameStop would have been probably worth more, honestly. Because that was like a 200x in a couple months. I forgot how much he said he bought Avanti for, but... pretty interesting either way. Like, if you think about it from that lens, like, these could really be 10, 20, 30x investments over the next couple decades. If you're willing to hold. But who knows? Who knows? Some time now by Ryan Cohen. His tenure has not been perfect, yet the company has recently produced significant free cash flow, has a ton of cash on the balance sheet, some very asymmetric convertible debt, and a business model that has been revamped to be more online, more digital, more crypto, more collectibles, and fewer stores. As a melting ice cube and a capital structure with some optionality, GameStop is roughly as I approached it in 2018, except it is only 16% shorted. All the numbers are 10 times bigger, and Ryan is running it, for better or worse. Those who know me, as well as those who read my posts so far here on Cassandra Unchained, know that I believe history often lends a valuable perspective to analysis. See, that part, bro, he's making a reference towards what would have happened if he held. I believe history often lends a valuable perspective to analysis. I feel like, oh man, interesting. This post is clearly along those lines. It is a foundation post. These posts cover subjects that would feel at home in a book if I were to write one. They are meant to provide both a foundation and a reference for future idea posts, which are analyses of current opportunities. This whole saga was a valuable lesson for me, and I hope for some of you. The second and final post in this GameStop mini-series will be an idea post, my breakdown of GameStop as an investment today. Until next time. Wow. We're gonna... that's gonna be a good article. This was great. That was awesome. That was awesome. That was awesome. All right, now it's time for Micron. Micron earnings come out in like 40 minutes. He just said he didn't hold it is all I took away. Never sell your stock. There's a few things to take away, but yeah, I mean, I think that's the most relevant thing for sure. Like, it seems like when you have an investment, when you have a true village slut that works out, selling isn't in your best interest. Damn, GameStop ripping today, boys. You're about to tap 23. You're about to tap 23, my G's. I also thought, I read this thing, and I thought this part was interesting. I'll read it real quick. Short selling is, of course, the investment technique most readily identified with hedge funds. As you know, I do not and will not simply seek to hedge the long portion of the fund's portfolio with a basket of short positions, or for that matter with index put options. It will never be my purpose to sell stock short as a part of risk management program contemporaneously defined. Rather, I approach the shorting of common stocks in an opportunistic manner that is in many ways the mirror image of my approach to going long stocks. I short a stock for the fund when there is some temporary, manipulated, or misunderstood phenomena that has caused the stock to rise to an egregious valuation. Vanguard Group founder John C. Bogle specifically ridiculed my strategy in a Forbes magazine article during the year. His technique to manage risk is to buy on the cheap, and if he takes a short position, I hope we're all sitting down for this. It is because he believes the stock will decline. In all respects, he describes my strategy exactly right, even inserting an quote if to reflect that I occasionally take short positions. I contacted Mr. Bogle after reading this characterization, and not surprisingly, we are on a different mind on this matter. He is, after all, a strong, efficient market proponent. What I propose just does not seem terribly plausible in his view. Nevertheless, this is what I do. I occasionally short a common stock in the fund because I believe the stock will decline, resulting in a profit. I trust forewarned you were sitting down. I will note that short selling has become extremely competitive. Much as the opportunity to find merger arbitrage opportunities at decent prices shriveled as capital-flooded investment funds devoted to this activity. The short selling field has become awfully crowded as a result of recent broad market declines. In my opinion, it is possible that managers in aggregate have done poor research on many of the companies they are short. This would be a very different situation from the past, when short sellers in aggregate were generally correct in their assessment, if not always in their timing. Whether relying on a checklist or on a service that supplies potential short selling ideas, managers new to the practice have potentially allowed the process to become too mechanical. As with most investment activities, the crowding and automating of the short selling field affects the practice and the profitability of more thoughtful short selling, in good part due to the mechanics of creating and maintaining a short position. I consider all these issues in deciding whether to commit the fund to short positions and to what degree. As a result, my version of short selling at the portfolio level might be considered special situation short selling. It will happen on occasion in stocks that are not generally heavily shorted, and only in cases where I've developed or can independently confirm an original investment thesis that recommends such action. During the vast majority of 2001, the fund held no short positions at all, and the primary driver of the fund's performance will continue to be its long positions. I thought that was kind of interesting, I guess. But feels good. Feels good to be a winner. We'll see if this keeps going or not. But now it's Micron time. It's Micron time. It's what everyone's waiting for. What's up, production crew? Sounds bullish. That was an article based on analysis from 5-6 years ago. So I don't know if you're joking or you're being serious, but it's not really relevant to today. I've been waiting all month for this. Be curious to see how many people are streaming this. Last time nobody was streaming it. So I imagine some people saw what happened last time I streamed it and now they're stealing my content. Like what most people do. But maybe not. Maybe not. What's up, Trippy Mike? Yeah, nobody's covering this, I don't think. So that's good. That's good. We gonna squeeze soon? Not to be rude, but that's a stupid question. So if you ask a better question, I'll answer it, but that's a stupid question. My answer should be Moas tomorrow. Well, it's not. Because I live in the real world. I don't live on Reddit. That should be the answer. That is the popular answer, but that's not the answer I'm going to give. I'm going to give you a real answer. Ron. Ron, what's up, bro? How you doing? $23, $25 tomorrow, maybe. Maybe it happens today. Maybe it happens today. Nobody knows. Nobody knows. I like someone said it in here best during one of the earnings streams. Everyone has an opinion, but nobody knows what they're talking about. So I don't remember who said that, but that is probably the most accurate thing anyone's ever said about the stock market. Everyone has an opinion, but nobody knows what they're talking about. When will the earnings report be out? When the market is closed. Just like, well, not every earnings, because some earnings are pre-market, but every earnings is after close if it's not pre-market. Yeah, I need this, let me screenshot this shit for now. Whoops. Messed that up. This will probably, I'm gonna make a stream clip of the Micron earnings. I'm curious how that'll do. So this will probably be my terrible thumbnail. Most likely. Make sure it's saved. Yeah. I'll be curious to see how this video does, because it's gonna be the first video I've made that really isn't about GameStop. So, but I think it'll do fine. I think there's enough people interested in Micron earnings that it'll actually do very well. Earnings in general for certain stocks, not just Micron, but I feel like it'll do well. Especially if I post it like during the earnings call, because then, you know, if there's like 200-300 people in the stream, potentially it'll suggest that video to them. So yeah, I'm not gonna record the earnings call, you know, we'll just continue to stream that, but I will make a video of like reading the earnings, even though it's probably gonna be like a really short video. I don't know, we'll see what happens. I could record the earnings call, I just don't think it's worth it, because I already have the stream of it. But I don't know. What do we do while we wait? Still got like 30 minutes. I don't know what to do while we wait. No. He's not dropping the requel article anytime soon. Oh yeah, if anyone's interested in Pokemon cards, GameStop actually has Pokemon cards on their website, which is crazy. They have a prismatic super premium collection for $200, which that's what people are selling. People are selling it for more than that on eBay. So I think this would actually be a decent pickup, potentially. I wouldn't get Mega Charizard or any of the other stuff, but if I was a Pokemon guy, I would probably buy this. Maybe. I don't know. I just think it's cool to see that they actually have cards on their website, because it's usually always sold out. The hell? I don't know why people are so obsessed with fractals. They don't even work. Fractals are like the most pointless analysis thing. I've never seen a fractal work out. Never in my lifetime. I also don't pay attention much to it, but I've never seen one. I've never seen one. %60 of the time it works every time. Yeah, there's nothing on here. Shout out Hugh G again. Thanks for sharing that video on here. Actually, it actually helps. I don't know, for future reference, if you guys want to help the stream, help the channel grow, share the video, share the stream. It's helpful. It's very helpful. What was I coming on here for? Oh yeah, I wanted to see this. What is this? I can't listen to it because it's music. Oh, it's a reference to that, okay. That's why Rosh sent me that. Rosh sent me this. Farewell to Flesh Ice 9 Killers. Whatever this is. Burry posted this. And it just has a reference to Roaring Kitty's meme. Unfortunately, it's music, so can't watch it. You want to read something Burry just replied to his last tweet? I'll check it out. Hugh G got any new memes? I have no clue. I have no clue. Replied. The post has been free. I made the decision to put it behind the paywall. There are a number of reasons for this. What did he reply to? Replied to his last tweet. This one? That's not his last post. Pretty sure it is. Or is that a reply? Oh, that's a reply. Duh. I don't know how Twitter works, all right? This is a very interesting chart. As household stock wealth being higher than real estate wealth has only happened in the late 60s and late 90s. The last two times the ensuing bear market lasted years. When looking at any chart purporting to show correlation as causation, alternative explanations must be explored. Very long-term charts are preferred because time takes care of many valid alternative explanations, as period-specific trees are seen from the perspective above a forest. In this case, I think the chart explains the situation today really well. After nearly a decade of zero interest rates, trillions in pandemic helicopter cash money, the greatest inflation in 50 years, and a new paradigm higher treasury rates for the first time in 50 years, stocks have emerged victorious even over home prices that rose 50%. Reasons for this are many, but certainly include the gamification of stock trading, the nation's gambling problem due to its own gamification, and a new AI paradigm backed by trillions of ongoing planned capital investment, backed by our richest companies in the political establishment. What could go wrong? Who knows? Who knows? Who knows? Getting some people piling in for the Micron earnings, though, so we'll just focus on that for now. We'll focus on that. I have the investor relation website up. GameStop's still sitting at 23. We need that, and we need a Twitter. We need Twitter. What's up, Unusual Market? Hope you're doing good. Oh. Yeah, 2-hour stream so far. It's not bad. Not bad. We just spent 2 hours researching a hour-long article. If you ask Reddit, it only takes 10 minutes to read, though. I thought that was a silly comment. Takes 10 minutes to read. Just ask Reddit. Button Glutens, what's up? I see your channel. You used to post Uncharted videos. That's a good game. Life is Strange, Mafia. That's fun. That's fun. I like that. That's a good time. Pending the Micron earnings. It's really funny how, like, people are really focused on earnings for a short period of time, and then they kind of just forget about these last few. It's kind of interesting. Like, everyone and their mom streams about, like, Apple and Tesla and stuff like that. But for some reason, they're just like, after that, they ignore all these other ones. It's kind of interesting. There's a lot more investors out there than just Apple and, the main companies. Especially in a stock like Micron. Micron is up quite a bit the past few years. And even the past year, I think it's doubled. Possibly even tripled. All right. Gonna be a boring 15 minutes if we don't find something to talk about. Let's see. Short interest hasn't updated. Crypto still down. Oracle dips 5%. Blue Owl Capital won't back 10 billion data center. Any new data? Oh, like economic data? You had some important economic data this week. It's Wednesday today. I think you had something. Let me check news real quick, and I'll go to economic data. NVIDIA preparing to slash GeForce RTX 50 production by 40%. Up to 40%. A quesarito from Taco Bell? It's an all new way to shit your pants. You eat a quesarito. It's a whole new way to shit your pants. Yeah, mortgage data today. Mortgage apps are down, but that's not really notable. Mortgage rates are down a little bit, but not really notable. Not really notable. Refi index still up a decent amount. I would say that's somewhat notable. People are still refiing, which kind of shows that people still need money, potentially. Because I don't know why you would be refining at 6% rates. Doesn't really make sense. Unless you need money. Or, you know, it could be for repairs and stuff as well, but... I thought you had something important, but I guess not. Maybe yesterday? How do I... This week. There we go. Unemployment rate's up again. That was yesterday. Yeah, not much data. You have inflation data tomorrow. But yeah. Nothing too crazy going on. Nothing too crazy. Started playing Ark, nice. Yeah, you have inflation data tomorrow, but other than that, not much. Dollar cost average day? Nice. No, it's been groups of people who just yelled, "Don't shoot." I had one guy try to come shoot us, but one of my teammates dealt with it before I knew what was happening. What? What's up, Hugh G? Hey, thanks for sharing that post, bro. Thanks for sharing that post. It's actually been performing almost as well as a lot of the Power Pack videos. So, appreciate you sharing that video. A lot of views are coming. I'm glad it's not like thousands of views though. It makes me feel like maybe Reddit isn't as terrible as I thought it was. Makes me feel like there's actually some real people in there. But yeah, I appreciate you sharing the video. I'm really glad that it's not thousands of bots. And it's actually, well, nobody's really commented or anything. They're probably watching it on Reddit, I'd imagine. But yeah, glad to see it's not just thousands of bots. But I appreciate you sharing, and if anyone, you want to help the videos, help the stream, you want to help this channel grow, share the videos, share the stream. That's the best way. Like, sharing on a different platform to an audience that I'll never be able to reach ever is very beneficial. So, yeah. So, yeah. Got about 10 more minutes till Micron earnings. Make sure you guys run up those likes. Run up those likes. Not as many people here for this Micron earnings. I know we still got like 10 minutes, but I thought last time Micron earnings was crazy. Can't remember. Where is it? Oh, I guess it wasn't crazy. It was decent. So maybe it won't be a crazy stream. There should be a decent amount of people here, though. This is a long 10 minutes. Damn, the market's down quite a bit today. Holy shit. GameStop crushing, bro. Crushing. Above 23 now. Look at us now. Look at us now. Tech is selling off. Tech is getting wrecked. And we're over here getting rich. You gotta love it. You gotta love it. Crypto's down, tech's down. I mean, technically GameStop's flat. It's not really going up that much, realistically, but it's nice to see. It's nice to see that everything else that people are excited about are down and we're up. It's nice to see because, you know, GameStop's such a bad investment, you know? Such a bad investment, you know? Oh, shit. Jeremy, what's up, Jeremy? How you doing, bro? Mr. Jeremy? Here, I got something for you guys. I know what you're looking for. I don't think Ruben's here to enjoy it, but I know what you're looking for. I know what you're looking for, chat. I know what you're looking for. This has 1,000 of these views have to be mine. Well, you're in the wrong place. Don't come into my stream. You're looking for Liberty Mutual Insurance, bro. That's what you're looking for.
Push start, then I go. Man, this Lambo season. If you're moving too slow, probably wouldn't ever see me. If I told you about everything that I've been through, probably wouldn't believe me. Bounce back from all that shit and I always make it look easy. Sometimes the money get to the pride, other times money don't make it to your side. Get it, then we spend it like it wasn't ours, cause you can't take it home with you when you die. Live fast, die broke, only you decide. Outside lights off, unsupervised. Bad wings when the doors go suicide. I ain't ever been this high. Bloodshot red in my eyes. Please don't fuck up my vibe. Floating through space and time. Colors coming out of my mind. I ain't ever been this high. Push start, then I go. Man, this Lambo season. If you're moving too slow, probably wouldn't ever see me. If I told you about everything that I've been through, probably wouldn't believe me. Bounce back from all that shit and I always make it look easy. But still wasn't none of this easy. Let me in the cold, they ain't need me. It's funny cause I ended up freezing. The diamonds all recent. Pastor probably think I need Jesus. I just need a new account of regions. Lambo season. I ain't on my side, I'm anemic. The hard times made me uneasy. Came out the city, but it feel like the city ain't leave me. Till my heart stopped beating. I ain't ever been this high. Bloodshot red in my eyes. Please don't fuck up my vibe. Floating through space and time. Colors coming out of my mind. I ain't ever been this high. Push start, then I go. Man, this Lambo season. If you're moving too slow, probably wouldn't ever see me. If I told you about everything that I've been through, probably wouldn't believe me. Bounce back from all that shit and I always make it look easy.
Pastor probably think I need Jesus. The pastor probably think I need Jesus. Pastor probably think I need Jesus. Lambo season. I ain't ever been this high. Bloodshot in my eyes. Please don't fuck my vibe. Float through space and time. Colors coming out my mind. Ah, beautiful. Decent volume. I know someone said it's not high volume, but I don't focus on that. I focus on volume profile, and you're getting decent fills all the way up. Besides the little gap you left here in 22, so not bad. Not bad as far as volume profile goes. Obviously, you're gonna hit resistance at some point. Oh shit, you're actually at the trend line again. You're at that longer term trend line again. Interesting. As you guys know, anytime you hit this trend line, you sell off a decent amount. So very interesting, very interesting. If we take over that line, that's solid. That's solid, chat. Whether we're going to or not, you know, that's up for debate, but we'll see. We'll see. The long-term astrology is playing out like it always. Man, GameStop has been the easiest stock to predict ever the past year and a half, and I haven't benefited really from it at all. Pretty sad, but it is what it is. Well, I can't say I haven't benefited from it at all, because I've benefited probably more than most people, but not as much as I should have. Let's put it that way. Pastor probably think I need Jesus. Lambo season. Pastor probably think I need Jesus. Lambo season. The hard time made me uneasy. Came out the city, but I feel like the city ain't need me. Push start and I go. And it's Lambo season. If you're moving too slow, you probably wouldn't ever see me. Make sure you guys run up that like button. Make sure you guys run up that like button. What's up, Josh Beatty? I appreciate you, bro. Appreciate you. Nice to meet you, bro. Thanks for being here. I appreciate you coming in here and just saying what's up. Most people are trying to look for what direction the stock's gonna go in without realizing that nobody knows that. So I appreciate you actually coming in here and saying what's up. Instead of being like, what direction's the stock going today? Am I on TikTok? Nah, I don't have TikTok. Just YouTube. I have Twitter, I guess, but I don't use Twitter. Just YouTube. I have a lot of shorts on YouTube. They're basically all power packs, but I have a lot of shorts on YouTube, but no TikToks. No TikToks. I'm here for the PE ratios and forward guidance. Nice. I don't think they give the PE ratios in the earnings report, so I don't know if I'll read about that, but if they give forward guidance, we'll probably read about it. Speaking of TikTok, whatever happened to someone buying that? I'm pretty sure someone bought it. I thought Perplexity AI bought it or some shit. I thought some AI company bought it. I don't remember. Good point, though. Good point. I wonder what happened to that. Now is not the time to research it, but that is an interesting thing. Hard times made me uneasy. Ding, 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 ding. There's the end of the market. Solid close for GameStop. What's Micron at? Micron's chilling, 225. We'll see what happens with that. We'll see what happens with that. The hard time made me uneasy. Lambo season. Guess we'll see what happens here. I don't know when they're supposed to release their earnings. Here in the next, like, 5-15 minutes. Somewhere around there. Glad you're not a hype man. I don't have a course to sell. I can't be. Oh shit, Micron's kind of ripping. Maybe the earnings are already out. Let's see. You're up 6% so far. Ripping. Let's see. EPS 396 was expected. It was actually 478, so beat by 21%. Revenue was supposed to be 12.88 billion, and it's 13.64 billion, so they beat by 6% on revenue. Pretty solid, pretty solid. Let's see, are they going to release where's the numbers? We got to get their actual earnings report here. Is it still ripping? I mean, up 6%, that's solid. That's solid. Shit, I wish it went up 40%. That would attract a lot of people to the stream. I'm surprised more people aren't coming in. That's a decent size move, 6%. It's not bad. Let's see, where's their why can't I find the earnings report on the investor relation website? That should be the first place they post it. Well, I mean, Twitter's the first place to get it, but they should post it on the investor relations website. See if it's on the SEC website. If it's not on the investor relation website, it's probably not on here. Yeah. Where is it? Yeah, there's a solid beat on EPS. Really solid beat on EPS. Woo. Stock is killing it. Is that all-time highs on the stock? Oh, no. All-time highs is like 245. You're close to all-time highs on the stock. That's interesting. Where's the... Why are they not uploading this? Oh wait, was that it right there? There it is. Wait, that's the earnings call thing. Where's their report? Is this the... No, that's last quarter's. How come they're not uploading the report here? It's kind of weird. You're only getting the EPS and revenue off Twitter. What time does the earnings call start? Isn't the earnings call soon? Doesn't say. 264 is all-time high. Maybe they're not going to release the... This is weird. Usually they drop the report on the investor relation website, but for some reason they're not dropping it. That's so odd. Yeah, that's last quarter's. What is going on? On the SEC website? Like, what is going on here? Usually they come out relatively quick. There's the 8K, but that's not useful. 8K is not useful. Drop in 10 minutes. Can I click this? Is this it? I think this might be it. Yeah, I think this is it. For some reason, they're not posting it on... Oh, there it is. There it is. Not found? What do you mean, not found? There we go. Alright. There we go. There we go. Make sure you guys hit that like button. Run up those likes. Appreciate everyone being here. The earnings call starts pretty soon, I think. I actually have no clue when the earnings call starts, but it should be soon. I have it up, so we'll be ready whenever it starts. The stock's still chilling. Not bad, not bad. Good to see, good to see. Alright, let's get into it, chat. Let's get into it. Micron Technology Inc. reports results for first quarter of fiscal 2026. AI demand acceleration and Micron execution drive record... Ugh, I gotta restart. I messed up. Sorry. Micron Technology Inc. reports results for the first quarter of fiscal 2026. AI demand acceleration and Micron execution drive record fiscal Q1 results, including highest ever free cash flow. Micron today announced results for its first quarter of fiscal 2026, which ended November 27th, 2025. Fiscal Q1 highlights: revenue of $13.64 billion versus $11.32 billion for the prior quarter, and $8.71 billion for the same period last year. GAAP net income of $5.24 billion, or 4.6 per diluted share. Non-GAAP net income of $5.48 billion, or 4.78 per diluted share. Operating cash flow of $8.41 billion versus $5.73 billion for the prior quarter, and $3.24 billion for the same period last year. In fiscal Q1, Micron delivered record revenue and significant margin expansion at the company level, and also in each of our business units, said Sanjay Mehrotra, Chairman, President, and CEO of Micron Technology. Our Q2 outlook reflects substantial records across revenue, gross margin, EPS, and free cash flow, and we anticipate our business performance to continue strengthening through fiscal 2026. Micron's technology leadership, differentiated product portfolio, and strong operational execution position us as an essential AI enabler, and we are investing to support our customers' growing need for memory and storage. For the first quarter of 2026, investments in capital expenditure net were $4.5 billion, and adjusted free cash flow was $3.9 billion. Micron ended the year with cash and marketable investments and restricted cash of $12 billion. On December 17, 2025, Micron's board of directors declared a quarterly dividend of 11 cents per share, payable in cash on January 14, 2026, to shareholders of record at the close of business on December 29, 2025. Those are all their numbers. We don't really need to go through that, I don't think. Further information regarding Micron's business outlook is included in the prepared remarks and slides, which have been posted as investormicron.com. Wait, where's that? I need to find that. We need to find the slides, or the slideshow. Have they posted it? I don't even think they posted the slideshow yet. Sanjay forgot to hit upload. Maybe. Something. Yeah, there's 80 people in the chat. Make sure you guys run up those likes. We need 69 likes, chat. Run it up. Run it up, chat. We need 69 likes. That's basically the same thing we just read, just on the SEC website instead. So we don't need that. We need to find the slideshow. But they probably won't upload the slideshow. Ah, the website crashed. Didn't this happen last time? I swear this happened last time. the website fucking crashed again. At least I already have the call open, but wow, Micron's at 240 now. Tap 241. It's doing. They like that record. They like those records. They like those records, apparently. I swear their website crashed last time, too, if I'm not mistaken. I'm almost certain it crashed last time. Pretty interesting. Yeah, their website crashed, bro. That's a disappointment. That's a disappointment. Now you're up 7%. This thing is crushing right now. There we go. It's back. Where's the slideshow, though? I don't even know if they'll post the slideshow. They might not post it until after the call. Bro, this website is tripping right now. Yeah, they don't have the slideshow up for some reason. I don't know why. Guess we're just waiting for the earnings call then. Kind of lame. I was hoping to have more to read for the video, but guess it's going to be like a 2-minute long video. Gosh. Kind of whack. The earnings call starts in like 15 minutes though. So that's nice. I wish I could see the slideshow. Still haven't released the 10Q either. Well, that's whack. Yeah, didn't last time I pulled the frickin' earnings call up on my phone, I swear. And I just put the microphone up to the up to this. So funny. I'm pretty sure that's what happened last time too. I guess we're not gonna see until the earnings call then. Yeah, I don't know. I don't think they're gonna upload it. Oh man. Whatever. I guess we'll just wait another 15 minutes for the earnings call. Do you think I should upload the earnings call as a separate video? Like, I don't know. I don't know. Tough to say, tough to say. I just don't know that it would work or not. I guess I could just try it, see what happens. I just don't think it's worth it. It's probably just better to upload that like couple minute long video while the earnings call is playing. Potentially. Who knows? Alright. What's going on with this? It crashed? You're telling me the earnings call crashed. Okay, it didn't crash, thank God. Thank goodness. I thought it crashed. Okay. That's good. That's good then. At least the earnings call didn't crash. That's positive. Yeah, I guess they're not gonna upload the slideshow until the earnings call is over. At least that's what it seems like. Let's give this a try. Didn't I restart it? The earnings call starts. When did I start reading? Started this video so soon. Oh, there it is. Didn't I like stop midway though? 26. AI demand and acceleration and Micron execution drive record. Yeah, I messed it up. Micron Technology Inc. reports Micron Technology Inc. reports results for the first quarter of fiscal 2026. Posted the slideshow yet? Slides, which have been posted as investormicron.com. This outlook is included in the prepared remarks and slides, which have been posted as investormicron.com. Well, it's trading. Well, it was trading over 240. So I don't know what you mean by that. Looks like it already went past 240. Kind of a weird thing to say when it's literally trading past that. Well, it traded past that. Kind of a weird thing to say. We'll see? Bro, it's... Are we looking at the same chart? Oh no, it's trading at 238 now. Oh no. Oh no. Are we looking at the same chart? Pretty sure, whatever. 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 Got like 10 minutes and then the earnings call starts. Make sure you guys run up that like button. Yeah, I don't think they're gonna post the slideshow. So whatever. I'm gonna stop trying. Damn. That last short I posted is crushing. Got like 5 more minutes and the earnings call starts. I wonder if I do this, what it would look like. Oh, that was a terrible crop, but whatever. I just want to see how it looks. I don't like that. I don't like that. Okay, we'll just use this for a shitty thumbnail real quick. A shitty thumbnail real quick. Alright, let's see how that does. I'll be curious to see. I'll be curious to see how that does, that video. I'd imagine it's not going to do very good, but I'm curious to see whether it does anything or not. This isn't water, huh? This is like some weird shit. Yeah, that's not water. That's disgusting. Still waiting. Still pending the earnings call. Make sure you guys hit the like button in the meantime. It's good for you. The like button keeps you healthy. Damn, almost a 3-hour stream. Pretty solid. Pretty solid. Micron's still up like 5%. It's doing alright. Still holding, sort of. Obviously, it's after hours. Who knows what's going to happen the next few days, but so far it's chilling. Looks like a lot of people think it's going to go down on the earnings call, but oh well. Welcome to the stock market. Are you going to short it? That's the real question. If you think it's going to go down on the earnings call, are you going to short it? That's the real question here. Because if you're just saying stuff to say stuff, I don't know. I don't know how relevant your opinion is if you're not going to short it. Just saying. You should probably short it if you truly believe that. Earnings call should be starting here in a little bit. It's just music still. They're starting the earnings call pretty early. I feel like they usually don't start it this early. Usually doesn't start until like 30 minutes from now. Still just music. Still waiting. Should be starting any minute now. Make sure you guys share the stream. You know? Share the stream. Share it on Facebook, Reddit, Twitter, whatever social media you have. Make sure you share the stream. It helps the channel a lot. More than anything. More than anything, sharing the videos, sharing the stream is very valuable to any YouTube channel. Or, you know, creator in general. Sharing content is extremely valuable. So make sure you share the stream. It made it seem like I could like control the slideshow, but you can't.
Bye. Welcome to Micron's first
here it
quarter
is.
2026 financial call. At this time, all participants are in listen-only mode. After the speaker's presentation, there will be a question-and-answer session. To ask a question during this session, you'll need to press star 11 on your telephone. If your question has been answered and you'd like to remove yourself from the queue, simply press star 11 again. As a reminder, today's program is being recorded. And now I'd like to introduce your host for today's program, Satya Kumar, Investor Relations. Please go ahead, sir.
Thank you, and welcome to Micron Technology's fiscal first quarter 2026 financial conference call. On the call with me today are Sanjay Mehrotra, our Chairman, President, and CEO, and Mark Murphy, our CFO. Today's call is being webcast from our investor relations site at investors.micron.com, including audio and slides. In addition, the press release detailing our quarterly results has been posted on the website, along with the prepared remarks for this call. Today's discussion contains forward-looking statements that are subject to risks and uncertainties. These forward-looking statements include statements regarding our future financial and operating performance, as well as trends and expectations in our business, contractual terms, market, industry, products, and regulatory and other matters. These statements are based on our current assumptions, and we assume no obligation to update these statements. Please refer to our most recent financial reports on Forms 10-K, Forms 10-Q, and our other filings with the SEC for more information on the risks and uncertainties that could cause actual results to differ materially from expectations. Today's discussion of financial results is presented on a non-GAAP financial basis unless otherwise specified. A reconciliation of GAAP to non-GAAP financial measures can be found on our website. I'll now turn the call over to Sanjay.
Thank you, Satya. Micron had an outstanding start to fiscal 2026, delivering fiscal Q1 revenue, gross margin, and EPS well above the high end of our guidance. This financial performance was driven by our strong execution across end markets and products in a tight supply environment. We achieved a number of records in fiscal Q1. Total company revenue, DRAM and NAND revenue, as well as HBM and data center revenue, and revenue in each of our business units also reached new records. We have completed agreements on price and volume for our entire calendar 2026 HBM supply, including Micron's industry-leading HBM4. We forecast an HBM TAM CAGR of approximately 40% through calendar 2028, from approximately $35 billion in 2025 to around $100 billion in 2028. This $100 billion HBM TAM milestone is now projected to arrive 2 years earlier than in our prior outlook. Remarkably, this 2028 HBM TAM projection is larger than the size of the entire DRAM market in calendar 2024. We are excited about our customized HBM4E customer engagements, which offer further differentiation opportunities to us, and we continue to make excellent progress on our HBM roadmap. Memory is now essential to AI's cognitive functions, fundamentally altering its role from a system component to a strategic asset that dictates product performance from data center to the edge. This structural shift means that system capabilities heavily rely on advanced memory for real-time contextual processing, which is vital for achieving autonomous and intelligent behaviors in AI data centers, as well as in applications ranging from self-driving cars to advanced medical diagnostics. With our technology leadership, differentiated product portfolio, strong operational execution, and solid balance sheet, Micron is in the best competitive position in its history and is one of the semiconductor industry's biggest enablers of AI. We anticipate substantial new records in revenue, gross margin, EPS, and free cash flow for both the second quarter and the full fiscal year 2026, and we expect our business performance to continue to strengthen through the year. Sustained and strong industry demand, along with supply constraints, are contributing to tight market conditions, and we expect these conditions to persist beyond calendar 2026. We are making progress with customers in our discussions for multi-year contracts with specific commitments. Simultaneously, we are focused on maximizing our production output from our current footprint, ramping our industry-leading technology nodes, and investing in new cleanroom space to add to our supply capability. Micron's technology leadership is foundational to our strong competitive position. Micron has led the industry for 4 consecutive technology nodes in DRAM and 3 nodes in NAND, with progressively faster yield ramps in every node. Our 1-gamma DRAM node is ramping well. 1-gamma will be the primary driver of our DRAM bit growth in calendar 2026 and will be the majority of our bit output in the second half of the calendar year. Looking beyond 1 gamma, development is underway for 1 delta and 1 epsilon nodes, which will feature innovations that we expect to extend our differentiation and technology leadership. In NAND, we are ramping our G9 node with robust yield ramps across both data center and client SSDs. Our QLC NAND mix, including G9 QLC, reached a record high during the quarter. Technology transitions to G9 will be the primary driver of our NAND bit growth in calendar 2026, and we expect it to become our largest NAND node later in fiscal 2026. I'm pleased to report that calendar 2025 is a record year for Micron in terms of both internal and customer quality measures, positioning us well to deliver for our customers as the memory industry's quality leader. As our products are increasingly integrated into higher value applications, our leadership in quality is becoming a more important differentiator. Turning to our end markets. As the world's leading technology companies advance toward artificial general intelligence and transform the global economy, our customers are committing to an extraordinary multi-year data center build-out. This growth in AI data center capacity is driving a significant increase in demand for high performance and high capacity memory and storage. Server unit demand has strengthened significantly, and we now expect calendar 2025 server unit growth in the high teens % range, higher than our last earnings call outlook of 10%. We expect server demand strength to continue in 2026. Server memory and storage content and performance requirements continue to increase generation to generation. Micron has a differentiated portfolio of high-value data center solutions to address these requirements, including our HBM, high-capacity server memory solutions, and data center SSDs. Micron's HBM4, with industry-leading speed over 11 gigabits per second, is on track to ramp with high yields in the second calendar quarter of 2026, consistent with our customers' product ramp plans. Our HBM4 uses advanced CMOS and advanced metallization process technologies on the base logic die and DRAM core dies, which are designed and manufactured in-house. This, along with our unique HBM design, packaging, and test capability, enables Micron's industry-leading performance and low-power leadership. Micron pioneered the adoption of LP DRAM in the data center. Micron's low-power DRAM server modules consume one-third the power of DDR DRAM server modules. Building on this leadership, we have sampled our 192 gigabyte LP SOCAMM2 product, which enables a 50% increase in capacity per module and a rack-scale LP DRAM density of over 50 terabytes. Our data center NAND portfolio revenue exceeded $1 billion in fiscal Q1, and we are seeing strong momentum across our data center SSD portfolio, enabled by our leadership NAND technology. In the performance SSD category, Micron has introduced the world's first PCIe Gen 6 SSD, leveraging our G9 NAND. We are seeing rapidly increasing qualification commitments for this product, including at hyperscalers. In mainstream storage, our SSDs based on G9 NAND are already seeing robust demand in the first quarter of calendar 2026. In capacity storage, our QLC-based 122 and 245 terabytes G9 SSDs are entering qualification at multiple hyperscale customers. PC demand continues to be driven by Windows 10 end-of-life and AI PCs. We forecast PC unit sales to grow high single-digit % range in calendar 2025, above our prior expectations, provided in our last earnings call of mid-single digits. As we look ahead into 2026, we expect these demand drivers to continue, while memory supply constraints may affect some PC unit shipments. Micron has completed multiple OEM qualifications of our 16 gigabit 1 gamma-based DDR5 and our G9-based PCIe Gen 4 QLC SSDs. Turning to mobile, smartphone unit volumes in calendar 2025 are on track to grow in the low single-digit percentage range. AI is driving memory content growth. The shipment mix of flagship smartphones with 12 gigabytes of DRAM increased to 59% in calendar Q3, more than twice the level from a year ago. Micron is accelerating innovation across our mobile DRAM portfolio. In fiscal Q1, we began sampling our breakthrough 1 gamma 16 gigabit LPDDR6 product to leading OEM and ecosystem partners, marking a major milestone in next-generation memory technology. LPDDR6 will power AI at the edge, delivering over 50% higher performance and improved power efficiency for flagship smartphones and AI PCs. Micron also sampled our 1 gamma LP5X 24 gigabit product and began volume shipments of the previously announced 1 gamma LP5X 16 gigabit product to multiple OEMs. Turning to auto, industrial, and embedded. In automotive, L2 Plus and L3 adoption is driving robust demand today, and our customers' roadmaps indicate a significantly higher memory content in fully automated vehicles. Micron is uniquely positioned for growth with our differentiated product portfolio and automotive market share leadership. Our ASIL-rated LPDDR5X and UFS 4.1 NAND products optimized for automotive and advanced robotics that include bandwidth-enhancing features are seeing strong demand and have already secured billions of dollars in design wins. In industrial, demand continues to strengthen, driven by the growing adoption of autonomous systems across various applications. Long-term demand trend trajectory remains robust for memory and storage in industrial applications, such as in factory automation, aerospace and defense, humanoid robotics, edge networking, and video surveillance. Across both auto and industrial markets, LPDDR4X and DDR4 are also experiencing strong demand, and we are making investments to provide long-term supply from our Manassas, Virginia fab. Now turning to our market outlook. Over the last few months, our customers' AI data center build-out plans have driven a sharp increase in demand forecasts for memory and storage. We believe that the aggregate industry supply will remain substantially short of the demand for the foreseeable future. The dramatic increase in HBM demand is further challenging the supply environment due to the 3-to-1 trade ratio with DDR5, and this trade ratio only increases with future generations of HBM. Additional clean room space is necessary to address this increased demand, and lead times for clean room build-out are lengthening across geographies. Together, these demand and supply factors are driving tight industry conditions across DRAM and NAND, and we expect tightness to persist through and beyond calendar 2026. Calendar 2025 DRAM and NAND industry bit demand growth expectations are higher than in our last earnings call outlook. We now expect calendar 2025 DRAM bit demand growth to be in the low 20% range versus high teens previously. We expect 2025 NAND bit demand growth to be in the high teens percentage range versus low to mid-teens previously. we expect calendar 2026 industry DRAM and NAND bit shipment growth to be constrained by industry supply. We expect both DRAM and NAND calendar 2026 industry bit shipments to increase around 20% from 2025 levels. Micron is working hard to support our customers' demand during this time, and we expect to grow our DRAM and NAND bit shipments approximately 20% in calendar 2026. Despite significant efforts, we are disappointed to be unable to meet demand from our customers across all market segments. Micron plans to increase our fiscal 2026 CapEx to approximately $20 billion versus our prior estimate of $18 billion. This increase will primarily support our HBM supply capability and also our 1-gamma supply in calendar 2026. We are pulling in equipment orders and accelerating installation timelines to maximize output capability. Micron is also investing across our global manufacturing footprint to add supply to support longer-term demand. We are seeing an enthusiastic customer response to our planned U.S. supply. We are pulling in our first Idaho fab timeline, and we now expect first wafer output in mid-calendar 2027, earlier than our prior expectation of second half calendar 2027. Earlier this year, we announced our plans for the second Idaho fab, which will begin construction in 2026 and be operational by the end of 2028. We are making good progress on securing necessary permits for our New York site and appreciate the partnership with the state of New York and the Trump administration. We plan to break ground on our first New York fab in early calendar 2026, which we expect will provide supply in 2030 and beyond. In Japan, with the support of METI, we are making technology and manufacturing investments. We are enabling future DRAM technology transition in coordination with our Boise R&D team. We are also adding clean room space in our Hiroshima fab to support these advanced nodes, which will increase production scale and optimize fab economics. In Singapore, our HBM advanced packaging facility is on track to contribute meaningfully to our HBM supply in calendar 2027. As HBM becomes a part of our Singapore manufacturing footprint, we expect opportunities for synergies between NAND and DRAM production. We are pleased with the progress on our assembly and test facility in India, which has initiated pilot production and will ramp in 2026. As we make progress on our strategic manufacturing initiatives, we will continue to be responsive to the market environment and disciplined with our CapEx plans. I will now turn it over to Mark for our fiscal Q1 financial results and outlook.
Thank you, Sanjay, and good afternoon, everyone. Micron delivered strong financial results for the fiscal first quarter, with revenue, gross margin, and EPS all exceeding the high end of our guidance. During the quarter, we generated record free cash flow, reduced our debt, and returned to net cash. Total fiscal Q1 revenue was $13.6 billion, up 21% sequentially and up 57% year over year, setting a quarterly record for the third consecutive quarter. We saw sequential revenue growth across all our business units. Fiscal Q1 DRAM revenue was a record $10.8 billion, up 69% year over year, and represented 79% of total revenue. Sequentially, DRAM revenue increased 20%. Bit shipments were up slightly, and prices increased approximately 20%, driven by tight industry DRAM supply, pricing execution, and favorable mix. Fiscal Q1 NAND revenue was a record $2.7 billion, up 22% year over year, and represented 20% of Micron's total revenue. Sequentially, NAND revenue increased 22%. NAND bit shipments increased in the mid to high single-digit percentage range, and prices increased in the mid-teens percentage range, driven by tight NAND industry supply, pricing execution, and favorable mix. The consolidated gross margin for fiscal Q1 was 56.8%, up 11 percentage points sequentially. This improvement was driven by higher pricing, with strong cost execution and favorable mix. Now turning to quarterly financial performance by business unit. Cloud Memory business unit revenue was a record $5.3 billion and represented 39% of total company revenue. CMBU revenue was up 16% sequentially, driven by an increase in bit shipments and higher prices. CMBU gross margins were 66%, higher by 620 basis points sequentially, supported by cost execution and higher pricing. Core Data Center business unit revenue was a record $2.4 billion and represented 17% of total company revenue. CDBU revenue was up 51% sequentially, driven by robust bit shipments and higher pricing. CDBU gross margins were 51%, up 990 basis points sequentially, supported by higher pricing and cost execution. Mobile and Client business unit revenue was a record $4.3 billion and represented 31% of total company revenue. MCBU revenue was up 13% sequentially, driven by higher pricing, partially offset by lower bit shipments. MCBU gross margins were 54%, up 17 percentage points sequentially, driven primarily by higher pricing. Automotive and Embedded business unit revenue was a record $1.7 billion and represented 13% of total company revenue. AEBU revenue was up 20% sequentially, driven by higher bit shipments and higher pricing. AEBU gross margins were 45%, up 14 percentage points sequentially, driven primarily by higher pricing. Operating expenses in fiscal Q1 were $1.3 billion, up $120 million quarter over quarter and in line with our guidance range. The sequential increase was driven by higher R&D expenses in support of technology and product development on our new DRAM and NAND technology nodes. We generated operating income of $6.4 billion in fiscal Q1, resulting in an operating margin of 47%, up 12 percentage points sequentially and 20 percentage points year over year. Fiscal Q1 taxes were $977 million on an effective tax rate of 15.1%. Non-GAAP diluted earnings per share in fiscal Q1 was $4.78, with 58% sequential growth and 167% versus the year-ago quarter. Turning to cash flow and capital expenditures. In fiscal Q1, operating cash flows were $8.4 billion, and capital expenditures were $4.5 billion, resulting in free cash flow of $3.9 billion. Fiscal Q1 free cash flow was a quarterly record, exceeding our prior record in fiscal Q4 2018 by over 20%. Ending inventory for fiscal Q1 was $8.2 billion, down $150 million sequentially, with days of inventory at 126. DRAM inventory days remain tight and below 120 days. On the balance sheet, we held $12 billion of cash and investments at quarter end and maintained $15.5 billion of liquidity when including our untapped credit facility. In fiscal Q1, we repurchased $300 million of shares as permitted by the terms of the CHIPS agreement. During the quarter, we also reduced debt by $2.7 billion, paying off a $1 billion balance of term loans and redeeming $1.7 billion of senior notes. We closed the quarter with $11.8 billion of debt and a net cash balance over $250 million. Through the fiscal year, we expect to further strengthen our balance sheet as we generate additional free cash flow. Before turning to our outlook, I would like to share an update on how we are benefiting from AI use across Micron. Today, over 80% of our professional workforce actively uses GenAI, with total usage up tenfold since last year. In manufacturing, integrating AI into yield and quality management has cut root cause identification time by half in cases. Our coding teams are realizing productivity gains of 30% or more using agentic AI. In R&D, GenAI is accelerating development by reducing cycle times in design verification, product validation, issue triage, and root cause analysis. Across business functions, GenAI is broadening automation opportunities, and we are deploying conversational analytics to accelerate and improve decision-making. We expect Micron's use of AI across the enterprise to further strengthen our competitiveness in the coming years. Now turning to our outlook for the fiscal second quarter. Industry demand is greater than supply for both DRAM and NAND. We expect higher price, lower cost, and favorable mix to all contribute to gross margin expansion in Q2. Operating expenses for fiscal Q2 are projected to be approximately $1.38 billion. As mentioned last quarter, Micron's fiscal Q4 2026 OpEx will also reflect the effect of an additional work week in this 53-week fiscal year. We expect a fiscal Q2 and fiscal year 2026 tax rate of around 15.5%. Micron is investing in a disciplined manner across our global manufacturing footprint to better meet demand. To address tight supply-demand conditions extending beyond 2026, we now project our capital spending in fiscal 2026 to be approximately $20 billion, weighted to the second half of the fiscal year. We expect free cash flow to strengthen in fiscal Q2, and we expect to generate significantly higher free cash flow year over year in fiscal 2026. Any impacts that may occur due to potential new tariffs are not included in our guidance. With all these factors in mind, our non-GAAP guidance for fiscal Q2 is as follows. We expect revenue to be a record $18.7 billion, plus or minus $400 million. Gross margin to be in the range of 68%, plus or minus 100 basis points. And operating expenses to be approximately $1.38 billion, plus or minus $20 million. Based on a share count of approximately 1.15 billion shares, we expect EPS to be a record $8.42 per share, plus or minus 20 cents. I'll now turn it over to Sanjay to close.
Thank you, Mark. AI-driven demand is here, and it is accelerating. And Micron is capturing these opportunities with the best competitive position in its history. This success is built on the strength of our global team, and I want to thank our team members worldwide for their hard work and dedication. We are in the most exciting time in Micron's history, and the best is yet to come. We will now open for questions.
What happened?
Operator, can you queue up the questions?
Never mind. There we go. I was like, what?
Yes, sir. And I show our first question comes from the line of Timothy Arcuri from UBS. Timothy Arcuri from UBS, your line is open.
Thanks a lot. Sanjay, I wanted to ask you about customer LTAs. I know we're hearing about D5 that's being bundled with HBM and in some cases even NAND. So can you just talk about these LTAs? I know it sounds like these are, stretching out through 26 and in some cases even into 27. I've even heard of some stuff into, 28. So can you talk about the nature of these LTAs? And then I had a follow-up as well. Thanks.
These are multi-year contracts that we are in discussions with several of our key customers. And these contracts, of course, involve DRAM as well as NAND. And, with respect to terms, of course, these contracts that we are under discussions for are very different from prior LTAs. They have specific commitments in them and much stronger contract structure. And beyond that, I can't be giving you specifics at this point. Of course, in the future, if and when appropriate, we'll be sharing further details.
Thanks. And then, Mark, I wanted to ask you about CapEx. So you took it up to $20 billion net, but it still seems, you're not guiding all fiscal 26 revenue, so we don't really know what the capital intensity number is, but it seems like it's like 25 to 30%, which is a little below your 35%, metric that you usually think of. So is that because you're constrained because of fab space? And can you just talk about, does that sort of like roll into fiscal 27 where we would see, CapEx up more near that 35% range? Thanks.
Thank you. Thank you. And I show our next question in the queue comes from the line of C.J. Muse from Cantor Fitzgerald. Please go ahead.
Back to you.
What is going on right now? Did they even answer that last question? I'm confused.
C.J. Muse, your line is open.
Yeah. They didn't answer the prior question.
Yeah, that's what I thought. I didn't think he answered it. What the hell?
Operator?
Yes, sir.
Can you turn it back to management so they can answer the prior question?
Sure. Management's line is open. Please proceed.
What the heck, dude? This is weird. I've never seen this happen before in an earnings call.
I believe the speaker's lines are muted at this time. Ladies and gentlemen, please continue to stand by. Your call will resume momentarily.
Yeah, that was weird, bro.
Operator, can you hear us?
Yes, we can now. You're
Very
muted,
weird.
sir. Please proceed.
Okay. Yeah, not sure what happened there. We were on mute here. So I just want to make sure that you heard Sanjay's response, correct?
Bro, what?
We did not.
You did not hear Sanjay's response. Okay, thanks, Tim. So Sanjay.
I heard Sanjay's response to the first question, but I didn't hear your response, Mark, to my question on CapEx and on capital intensity.
Okay, Tim. Thank you. So you're right, Tim. We're not providing a full year revenue guide. We did indicate that our CapEx was going up in calendar or in fiscal 26, and and a substantial part of that CapEx is support DRAM. And specifically HBM and the 1 gamma ramp. I would say that from 25 to 26, the plan is roughly to double the brick and mortar construction CapEx. And at this time, we would expect 27 CapEx to be up. And, but I want to emphasize that Micron's going to remain disciplined. on CapEx growth to support bit demand and that or bit supply, and that supply will be in line with demand. As your question of capital intensity, our capital intensity of course is dropping as the market conditions remain very constructive, and of course we are working to be very efficient with our capital spend.
Okay, Mark, thank you.
Thank you. And I share our next question comes from the line of CJ Muse from Cantor Fitzgerald. Please go ahead.
Yeah, good afternoon. Thank you for taking the question. I guess, Mark, to follow up on the prior question around CapEx, and the relative growth seems very conservative in the backdrop that we're in, and it feels like that you're just sitting here without clean room space, and it also doesn't sound like you're meaningfully pulling in clean rooms. So can you talk about the philosophy there? And I guess what I'm taking away from your commentary is that you're being very conservative and judicious with adding capacity here.
Well, I would say that we've been indicating issues with supply for several quarters, that we were working inventories down, that node transitions were going to be the principal source of supply growth in fiscal 26, and that's exactly what's happening. And we know that clean room space takes time, and the HBM growth, which has only picked up with AI-driven demand, has further pressured supply. So there's no near-term solution. As we said in the prepared remarks, the entire industry we expect to be short to demand, and we're no different in that case. But we are moving quickly to do our best to provide customer supply, and we have pulled in tools. We have accelerated construction in Idaho. We are doing everything we can within our existing footprint and near-term capacity expansions to deliver supply. And so we provided a bit growth number for 26, and that is supply constrained.
And I'll just add that, of course, we are continuing to make the investments in technology transitions in our existing footprint. And as we highlighted, that 1 gamma node will be, majority driver of our supply growth in 26. And of course, you have seen us make investments not only in technology transitions, but also in greenfield capacity, but also enabling greater technology production capability in our existing clean rooms in Japan. And we are making the necessary investments there as well. So, of course, we remain disciplined, but we are very much focused and trying to work hard toward increasing our supply there. And pleased with our plans for Idaho 1, Idaho 2, and of course, New York as well. And of course, in the short term, very much focused on maximizing production efficiencies, maximizing our production output from the existing footprint as well. But yes, demand fundamentals are pretty strong, driven by AI from data center to edge with the build out of our customers, and supply is significantly short. And, I would say that, in the medium term, we are only able to meet about 50% to two-thirds of our demand from several key customers. So we remain extremely focused on trying to increase the supply here and making the necessary investments.
Very helpful. And then I guess as a follow-up for gross margins, obviously the guide is quite stellar, but curious as you go through calendar 26, how should we think about cost down across both DRAM and NAND? And as you transition from 3E to 4, is there anything that we should keep in mind or we should think about and contemplate in our models where there might be higher costs temporarily giving yields or whatnot? Thanks so much.
Yeah, so our CJR cost execution has been very good across both DRAM and NAND. Of course, we're getting some volume leverage, but spend control has been very good. Yields have been good. We do have some startup costs coming in for the new fabs, new construction across the network that starts to come in second half of 26 and into 27. But at these size of the business at these levels, it's a relatively small impact on margin. We're not going to provide cost guidance for the rest of the year as it depends on many factors, including mix. But to our earlier question, I can say that we've talked about ramping 1 gamma DRAM and G9 NAND at length for supply in 26, and those ramps are proceeding well and will be a tailwind to our cost as these nodes ramp.
And regarding your question on HBM3E and HBM4, as we have said, we'll be beginning to ramp production of HBM4 in CQ2 timeframe in line with our customer demands. And of course, our HBM4 is progressing extremely well, very pleased with our product, industry-leading product with the highest performance of over 11 gigabits per second. And so, I mean, that's the highest performance, and very pleased with its overall yield ramp. And we expect our HBM4 to be having a faster yield ramp than our HBM3E. And of course, our mix of HBM3E and HBM4 during 26 will be very much based on our overall customer demands, and we will have both of these products with strong profile in our 26 revenue.
Thank you.
And I share our next question in the queue comes from the line of Harlan Sur from JP Morgan. Please go ahead.
Hey, good afternoon, and great job on the quarterly execution. Just over the past 3 to 4 months, as we track the different ASIC AI XPU programs, there's been a significant upward revision on ASIC XPU volume shipments next year. You have Google TPU, AWS Trainium, and so on, right? And all of these XPUs are still going to be using HBM3E. Has the team seen this near-term positive dynamic in your order book for 3E? And given that you're fully contracted for calendar 26, what appears to be growing upside to next year's view, how is the Micron team going to try and manage this upside dynamic in 3E alongside a strong HBM4 demand profile?
So as I mentioned, Harlan, earlier, that of course 2026 will have a mix of HBM3E and HBM4. And we have shared with you in the past that we are engaged with multiple customers, with the entire ecosystem here of HBM customers, and very much engaged with them. And they will all contribute to our strong year-over-year growth in revenue in 26. And of course, that will be made up of both HBM3E and HBM4. So as I said, I mean, we will continue to manage the mix of the two based on customer requirements. I can tell you that in 2026, supply on HBM will be tight. Non-HBM DRAM will be tight as well. So we are continuing to see, as we have highlighted in our prepared remarks, tightening supply environment. And of course, we see strong year-over-year growth in 26 for our HBM. We today upped our revenue forecast for HBM. We highlighted that by 2028, we expect it to be $100 billion TAM, and that's 2 years ahead of our prior outlook. So of course, HBM is on a good trajectory. And what I can also tell you is that customers, as their architectures are evolving, as their platforms are evolving, and these are customers across the ecosystem, of course, they are requiring more and more HBM. I mean, the value of memory in terms of ability to deliver the AI capabilities and the functionality and the performance, memory is critical and more HBM is required, and that's across the various AI platforms in the industry.
I appreciate that, Sanjay. And then after 2 to 3 quarters of enterprise SSD sort of muted trends, I believe the team saw a strong acceleration in the business, right? According to some of the third-party research estimates, I think your enterprise SSD business grew like 25% sequentially in the most recent quarter, right? So you're the number 3 market share leader amongst 8 or 9 competitors, right? Very strong share position. Given, I would assume, increasing demand trends here, expanding lead times, is the Micron team also entering into long-term supply agreements with your eSSD customers? And then secondarily, I mean, SSD demand, is it more tied to expansion in inferencing workloads as customers aggressively move to monetization? In other words, is storage intensity higher on inferencing versus training workloads?
So with respect to enterprise SSDs, really very proud of our engineering and business teams, and of course our sales teams in terms of our customer engagement and the strong momentum and the share gains that we have with our enterprise SSD. Of course, our enterprise SSDs are a big part, an important part, let me say, of our data center strengthening mix. Of course, DRAM is continuing to increase in mix toward data center, but data center SSDs are an important part of our overall revenue mix. And, we expect to continue to focus on share gains with our strong SSD roadmap, customer engagements, and great quality that we provide to the customers. And as I mentioned, that our multi-year contracts that we are in discussions with our several key customers, our SSDs, our data center SSDs are also part of that. And let me tell you that these multi-year contracts are not just about data center customers. They also are about multiple customers across our market segments here. And in terms of your questions on, is the SSD requirement growing with inferencing versus training, what I can tell you is that in the data center AI applications, I mean, as the generative AI moves to more and more video, of course, that drives greater demand for more SSDs as well. So, the rapid evolution of AI from training to inferencing and rapid evolution of AI models and applications, they're all driving greater growth of enterprise SSDs, yes, fueled by Gen AI.
Thanks, Sanjay.
And I share our next question comes from the line of Tom O'Malley from Barclays. Please go ahead.
Hey, guys. Thanks for taking my question. Sanjay, you've been helpful in the past about kind of talking about Micron's ramp in HBM and then also the ramp of the total market. You gave some new color on HBM with the $35 billion moving at a 40% CAGR. But Micron specifically, I was curious if you could give us any color on percentage of the DRAM business today that's HBM from a dollars perspective. And then on share as you move into next year, obviously, there's a large competitor that is looking to become more competitive at 3E. We haven't heard anything on 4 yet. How do you feel about your competitive positioning into next year? And do you think that you're going to make any strategic decisions differently based on the public, certification of their memory in the next couple of months? Thank you very much.
We feel very good about our competitive position. We feel very, very good about our product and our HBM4 product that we have highlighted as industry-leading performance over 11 gigabit per second, the best specifications in the industry with our performance. And of course, we feel very good about the power consumption in our products as well. In the past, we have shared with you that how our HBM3E is 30% lower power than any of the competitors in the industry, and we are maintaining that momentum of low power, which is in data center applications is very important. So we are maintaining our performance and power and, of course, our strong capacity position with HBM4 roadmap as well. So we feel very good about our competitive position, about our roadmap, and our roadmap going beyond HBM4 for the future years, beyond 26, as well. And we are very proud of our team's ability to execute successfully over the course of last several quarters in terms of ramping up production capabilities of HBM3E. And we shared with you that in CQ3, we reached our share of HBM3E to be in line with our HBM share to be in line with our DRAM share. And we have always highlighted that as we have reached that share, we will, particularly in this tight supply environment, we'll be managing the mix of our HBM as well as our non-HBM. All of it is in high demand, and HBM as well as non-HBM has strong profitability. So looking at our strategic customer relationships as well as our overall profitability goals and growth objectives, we'll continue to manage that mix between HBM and non-HBM. But of course, HBM is growing, and we have highlighted that how we expect the TAM to be $100 billion by 2028, a couple of years ahead of our prior projection. And of course, we will grow our HBM as well. 2026 will see a strong year-over-year growth in our HBM. And in this tight supply environment, as I mentioned, that the gap between the demand and supply for all of DRAM, including HBM, is really highest that we have ever seen, and I quantified it earlier as well. So in this environment, of course, working closely with our customers, we are continuing to manage our mix of the product here.
Thank you, Sanjay. And just
as we focus on also continuing to increase supply to better address our customers' demand requirements.
Perfect. And then just as a follow-up, you've said historically kind of the $8 billion run rate. If you look at November and February, you're taking up the total TAM, but any color specifically on HBM contribution in the November quarter and what you're expecting in the guide?
We are not really providing those specifics here in terms of the breakout. We highlighted that in FQ1, our HBM revenue was a record. We did highlight that. And beyond that, we are really not going to be providing the specifics in terms of revenue. And just would tell you again that year over year in 26, we'll be seeing strong growth in our HBM revenue.
Thank you, sir.
And again, our product is very well positioned. So, that's a very good place to be in terms of managing overall mix of the business.
Thank you. And I show our next question comes from the line of Krish Sankar from TD Cowen. Please go ahead.
Yeah, hi. Thanks for taking my question, and congrats on the phenomenal results and guidance. My first question is for Mark. I know you spoke about the sustainability for next year. I'm kind of curious how to think about growth margins beyond the February quarter, like into May. Is it going to improve or sustain at these levels? How to think about the growth margins? And a follow-up for Sanjay.
Thanks, Krish. We're not guiding margins beyond Q2. We did guide a record Q2, as you know, 68%, 11 points sequential improvement, 7 points better than the previous record. We did indicate that our business would strengthen through the year. So we do believe margins can be up. We do believe that they will be up for DRAM and NAND. Now, keep in mind that at these high gross margin levels, mathematically, we get less in gross margin percent for the same increase in price. So, we would expect gross margins to expand beyond fiscal Q2, but we would expect that growth to be more gradual than what we've seen in the last couple of quarters, or the first quarter and the second quarter guide.
Got it. Thanks a lot, Mark. That's super helpful.
And
then
Krish, just one last thing. We have indicated that strengthen through the year because we believe this constructive market environment will remain so through the year, these favorable market conditions. But we also, we're executing very well on cost. And as Sanjay mentioned earlier, we're deploying the bits to the valuable part of the market and where we can serve our customers best.
Got it. Super helpful, Mark. Thanks for that. And Sanjay, just as a follow-up to the earlier question, I understand you don't want to put some boundary conditions, but a year ago you totally nailed it when you said you're going to get HBM market share close to your DRAM market share, DDR market share. So when you talk about 2028 CAGR of 40%, 100 billion TAM, how to think about Micron's HBM market share in that realm? Should we assume it's going to be in the low 20%? So that spectrum, or is it going to be lower? Thank you.
So Krish, again, we are not really going to be specifying, the share. As we have said, we will be managing the mix of the business between HBM as well as our non-HBM. It's like any other product in our portfolio that, when you have a strong product roadmap across the portfolio, then of course, we manage the mix across our portfolio with all the strategic reasons and customer relationships in mind. So Krish, we are not really going to break that down. And, all I would say is that, in this current industry environment, which we see as durable industry fundamentals, in the foreseeable future, we are in a very good position with all the tailwinds of our product portfolio and, of course, the increasing value of memory across the board, of course, HBM, but also non-HBM in data center and other markets. We will just remain very focused on managing the mix of our business and, of course, managing for the best in the midterm as well as keeping in mind the longer term.
Thanks a lot, Sanjay. Appreciate it.
Thank you. One moment for our next question. And our next question comes from the line of Chris Danely from Citi. Please go ahead.
Hey, thanks, guys. So I just wanted to dig in on these long-term customer contracts you guys are negotiating. Can you give us any more sense of when you think you'll be able to sign these, and then maybe just talk about what the holdup is? Is it just the unprecedented length or size? And given that the AI companies are asking for so much of your capacity, are you able to get them to, more or less contribute to the building of a new fab? Thanks.
So we will not really get into the specifics around our contract discussions with our customers. But again, I will highlight a couple of important factors that, customers are concerned about long-term access to adequate memory in the environment that we are heading into. And, that's leading to constructive dialogues with, several key customers and across our multiple markets, in terms of, their supply as well as other important specific commitments related to these longer-term agreements. So not getting into the specifics, but as I highlighted, our contract structures that we are discussing are not like anything before. They are far stronger contract structures with specific commitments. And of course, different from prior contracts is that those used to be like one-year contracts, and these are multi-year in nature as well. And as we look at addressing the customer discussions, of course, we have to look at our overall supply. And I have mentioned to you that in the medium term, we are only able to meet, half to two-thirds of the demand from our several key customers. So all of that, as we are managing our customer relationships and, keeping, our strategic objectives in mind, all of that has to be taken into account as we manage our contract discussions. But really not getting into the specifics here.
That's still very helpful, Sanjay. Thanks. And for my follow-up, just a question on HBM and the pricing there. So given that the demand is so strong, I think you said you're sold out for 26. are you guys locked into a set price, or can you let that price more or less float a little bit, given how strong demand is, like DDR5 does, for example?
We are really pleased with our product position and our ability to work with our customers, as we highlighted in our prepared remarks, that our HBM for 2026 is sold out in terms of volume, and our negotiations with customers have been completed for calendar year 2026 for volume as well as pricing. And as we have always highlighted that our HBM has strong profitability, and of course, very much focused on ROI, and our non-HBM business also clearly has healthy profitability as reflected in the results that we produced, as well as in the guidance that we have provided here.
Great. Thanks, Sanjay, and congrats again on the results.
Thank you.
Thank you. And I show our next question comes from the line of Vivek Arya from Bank of America Securities. Please go ahead.
Thanks for taking my questions. Sanjay, I'm curious, at what point does increasing memory price impact demand for electronics? If you set aside the data center and the AI market, do you see some elasticity? Do you see any impact on demand as you look into 2026 for more consumer and kind of traditional enterprise products? How does that shape where memory pricing can go next year?
We have highlighted in our prepared remarks that in some of the consumer markets, some of the unit demand may get impacted, given semiconductor prices here, given memory prices here. And of course, some of the customers may have, for example, in smartphone and PCs, they may have some mix adjustments in their portfolio as well to address available supply to them. But these are accounted for in our forecast that we have. And so, some of the possible impact on unit demand and some of the customer mix changes have been accounted for in our forecast. And we, of course, even then, we see a very, very tight supply environment here in the large gap between the demand and supply. However, I will highlight to you that AI experience across from data center to edge, including in these edge devices like smartphones and PCs and other devices, AI experience really more memory is essential. So without sufficient memory, that AI experience, the functionality, the capability does get impacted in these edge devices as well. So, the punchline here is that AI across the board from data center to edge is driving increase in content and increasing requirement for memory as the customers look ahead at their roadmaps. And, that's why customers are, of course, working with us with respect to access to supply for their long-term multi-year plans here as well.
Thank you. This concludes our Q&A session and today's conference call. At this time, I'd like to end today's conference call. Thank you all for participating. You may now all disconnect.
I won't lie, I almost fell asleep. Get me out of here. Get me out of here! Okay. Well, that was exciting, I guess. Not really. That was honestly the worst earnings call I've ever listened to. Usually they're a little better than that. That was not a great earnings call, but I saw the stock was up decent. Wasn't there some guy in here saying that it wouldn't go past 240 or something? All right. You shouldn't talk about short-term price action like you know what you're talking about, because you don't know what you're talking about. I don't know. It's kind of funny. It's kind of funny. But whatever. Whatever. Profits are baked in based on their long-term agreements. Manage expense and R&D. I guess Burry posted a thing. He's saying Cassandra Unchained is 3.5 weeks old. We thank everyone who subscribed, participated, blah, blah, blah. But it says reference posts will be dropped approximately 2 to 3 weeks after every article. So we should get the second GameStop article here in like 2 to 3 weeks, I imagine. Which I don't know. Yeah, probably end of the month, I'd imagine. Maybe start of next month. That'll be cool. That'll be cool. Everyone has to hate on AI all at once. Everyone hates AI because their stock prices are going down. The only reason anyone cared about AI is because the stock price was going up. Like, literally. It's just like crypto. Nobody cares about crypto when the stock price is going down, but when the crypto price is going down, I guess I should say. But everyone cares about it when it's going up. AI's been dog shit. The only reason anyone thought AI was good was because the stock price was going up. It's literally the only reason. So yeah. This is probably the end of the stream unless you guys have something to talk about. I'm probably gonna get out of here. I can get 8 hours of work done in one. What 8 hours of work do you have to do personally that takes 1 hour? Please elaborate. Almost any. Oh, so you can't name a specific thing? Okay. Yep, must be really useful then. Have you ever even done 8 hours of work with AI? Let's be real. Have you ever even done 8 hours of work with AI? Because I really doubt it. You can't even name a specific thing, my guy. But I'm out of here. Thank you to all the OGs for always supporting the stream. Thanks to the Micron people. Thanks for stopping in. God bless you. I hope you have a good rest of your day. Peace out, Ruben. Later unknown. Rosh. Peace out, Rosh. I don't know who else is here, but I appreciate you guys. Jeremy, what's up? Peace out, bro. Zealin, peace out, bro. Thanks for stopping in. Rainbow Mail, what's up, bro? Thanks for stopping in. Have a good one. Han Solo. He's done 1 hour of work while trading stocks on 7 hours. Got his ass. Got his ass. Oh, man. That's funny. Martin, peace out, Martin. Appreciate you stopping in. That shit's funny. That shit's funny. That's a funny argument because that's a very common argument is that they can get hours of work done in 1 hour or less. But like anyone who has that opinion probably doesn't even use AI for like their actual work. They probably use it to summarize articles that they're too lazy to read and shit. Like, I don't know, man. People are weirdos. They just don't want to admit the only reason they care is because the stock price is going up. But don't worry, I know. You know, I've been doing this for a long time. I know the reason why people care about things. And it's not because they think it's good. It's definitely not because they think it's good. It's because stock price is going wee! And now that it's going down, nobody cares. Just like crypto. Welcome to investing. Welcome to investing. I wish I could make AI do my service calls. That'd be dope. That'd be dope. Maybe one day in the future. Maybe one day in the future. But I'm going to get out of here. Thank you guys again. I'll catch you guys tomorrow for Nike earnings. Oh, Marius, you're too late, bro. You're too late, Marius. I'm out of here. I'm about to leave. Marcelo, I haven't seen Marcelo in here in a while. Hopefully you're good. But I'm out of here, Marius. You came in too late, bro. But I appreciate you stopping in either way. I'm happy for him. Nice, bro. Isn't it your birthday today? Isn't it your birthday today, Marius? Happy birthday, bro. I'm pretty sure it's your birthday today. Happy birthday, my friend. I hope you had a good one. I hope you had a good one. You remember? Of course, bro. Of course. I remember most things the OGs tell me. If someone's here all the time and they tell me something, I tend to remember it. It was good, just came back home. Hell yeah, bro. Glad to hear that. Glad to hear that. Well, unfortunately, it's bad timing because I'm about to get off, but hopefully I'll see you tomorrow. Enjoy the rest of your night, my friend. First thing I did on PC was open you up. I appreciate that, bro. I appreciate that. Sorry I'm out of here, bro. Sorry I'm out of here, but I'll see you soon, bro. Have a good rest of your night. Peace out, Han Solo. Appreciate you stopping in, bro. Anyone else who's here, thank you. All the OGs, thank you guys for supporting the stream. And I'll catch you guys soon. God bless ya. Peace!